Hey, good morning, everybody. Great big good morning to everybody. My name is Rick Sadler. If you don't know, I'm the owner of Hit and Run Candlesticks, trading for profit, and I want to thank everybody for being here on this Saturday morning, April 26, 2014. I really appreciate it. Thanks for. I recognize a lot of names, and I see not a lot of names I don't recognize. So thank you very much for everybody being here. I do appreciate that. I want to welcome you to our new coaching Omnovia trading room. This is the biggest crowd we've had here up till now. There's just been a few people. We've been testing it out. We have two Omnovia rooms. One is the trading room, which most of you are familiar with. And then we have a second room that is designated just for coaching. Myself and a few other people will be doing coaching seminars here coming up, and we'll certainly let you know when that will happen. That way it doesn't disturb the room during the day. Best time to do coaching is actually when the market is open. Uh, so we decided to open up a second room for that. Um, let's see here. I need to click a button. All right. Okay, so let's see a couple of things here. If somebody's hearing a ding, if you want to go up to the top right-hand corner, gray wheel, click on that gray wheel, and then uncheck the sound notification and just hit save. And that reminds me, Gigi, I want to give you a big thanks for answering a lot of these questions this morning in the room. Peters, you as well. You answered a few this morning. I heard that. So thank you. Thanks for helping out there. It's always asked, is this going to be recorded? Yes. Yes, it is going to be recorded, and I will get the email out to you. It's very unlikely it will be out today, but I will get it recorded. There's also another thing, and this is for Sugar Bear there. If you can't hear or throughout the presentation the sound drops off, or if the chart doesn't move, or you think something's gone crazy, please don't waste your time just typing in the room, I can't hear, I can't hear, I can't hear, I can't hear. Just simply click F5, and if that doesn't work, log out and log back in. Quite honestly, if it's just one person, then I know it's working for 191 people, and I'm not going to do too much about it. Now, if I start seeing a string of, hey, we lost sound of different people, then, we'll worry about it. But if one person can't hear, if you lose that, please just log out, log back in. Remember, this will be recorded, so you won't miss anything. I'm going to try very, very hard to keep this to about an hour, and then questions and answers afterwards. I certainly don't want to keep anyone here. And then also just respect to the recorder. And a great big thanks goes out to TC Rick in California. He is recording this for me. So thank you, Rick. I appreciate it. Another thing I would like to ask is please try to keep the private chat and banter in the private area. I've not turned off the private chat, so everybody can chat all you want privately. But if you try to keep the private chat and the banter to an absolute minimum, it's easier for me to keep up with questions, and I encourage questions. It is off. It's not supposed to be. Well, okay. We'll fix that later. And it really, really helps when you ask a question that if it's about a specific chart, you actually have that ticker symbol in there. If we're talking about a chart and 3 minutes go past, and I might look at two other charts, and if you ask a question based on a chart 3 minutes ago, please, there's no way I'm going to know which one it is. So please put that ticker symbol in there, and please try to use caps on that. Okay, let's see here. Let me get through a couple things here too. The important thing about trading that we always want to remember is trading is about making money. That's what it's about. It's just simple. It just that simple. Sounds easy. Well, the truth of it is our emotions get in the way, and we think we know more than we really do. And this is why rules are very, very important in trading. Rules keeps us within boundaries, um, protective boundaries, profit boundaries, and you'll find that the chart patterns that I use, and that's not limited to those just the ones we're going to talk about today. These are just some of my favorites, but I try to build rules around chart patterns. Another thing too is the chart patterns that I'm looking at. Um, they're not anything trick about them necessarily. Certainly nothing I invented, and all I've taken is the wheel that has been created by other folks, other traders, and I've maybe put a twist on it to fit my trading personality and fit uh, make them so that I can call them rule based. I have rules based on those patterns. And we'll go over some of those today. Today, because we're limited to an hour, this is just going to be kind of an overview of some of these chart patterns. We're going to look at some charts. I don't have any fancy PowerPoint presentation here. As soon as I'm done talking here, we're going to get into charts, and it's going to be live. We're going to go right into that. Let's see here. Okay, I guess the private is not working, and I don't know what to do about it right this second. I apologize. I do apologize. It should have been. I don't know why it's not. Nope, nope. We're still there, Carl. We're still there because I want to talk about something on that. And and the last thing I want to say, and then we're going to talk about the page that's up there. This is one of these quotes that I kind of came up with, and I think is very important, and maybe throughout the day we'll talk about it a little bit more. But trading is about making money. It's not, excuse me, it's not about being right. Trading is about making money, not about being right. Now, somebody might be thinking, well, what's the difference? There is a huge difference, an absolute huge difference. And we can talk about that a little bit later, maybe. Okay, what you see up on the screen, of course, on the top left there, that's the chart patterns we're going to take a look at today. And then you'll see April 25th, 2014, today's trade idea. This was yesterday's trade idea. If you're in this room right now, then I suspect you received this email Thursday night, and you probably received it Thursday morning. I'm sorry, Friday morning. Most every day, I put out a featured trade idea and a little write-up of some sorts, and then some follow-up. Members, you can find a full version of it on the members side of the website. Non-members, if you're here, then you've been getting these here a little bit. So body, B-O-D-Y, if you would have went long body Friday morning, right away you'd have been making money, and this is a chart we'll be looking at as one of our pinball plays right here. So I just wanted to share that and let you know that you should be getting an email. If you're here anyway, you should be getting that email every day, almost every day. There's always that technical issue or something with a featured trade idea. And then there are Fridays sometimes I don't put out a featured trade idea. Okay, let's just see if this works. Okay, everybody should have a chart up now. The chart should be body. In case there's not, we'll just kind of pause just for a second in case I need to do something. I don't see anyone typing, so then I'm assuming that, thank you very much, Sophie, appreciate it. So you should see the chart body up there. Um, I didn't really want to start with the pinball setup. I wanted to start with a T-line, but while we're here, let's take a look at this. The pinball setup, well, yeah, we'll just start with the pinball setup. What the pinball setup is, um, what the pinball setup is basically looking for a chart that has sold off a lot. I mean, we're looking for a chart that has been down, something that's in a big downtrend, and then all of a sudden that downtrend stops, and it pretty much moves sideways until it crosses up over the T line. Really quickly here, let me run through these moving averages in case anyone doesn't know what they are. The black line is the T line. That's the 8 exponential moving average. The green line is the 20-day simple moving average. This should be orange. I think it comes across to you guys sometimes as red, little dotted. That's the 34 exponential moving average. The dark blue is the 50 simple moving average. And way up here, you can barely see it on this one, is the 200 simple moving average. So those are the moving averages that I use on the daily chart. And then, of course, volume down here. So that's my daily chart that I use to trade with. Okay, we're looking at the pinball setup. Here's what we here's what we're looking for: a downtrend, a downtrend. Oh, by the way, GD, thank you for doing that. I need to fix that. Something I noticed here yesterday on that link at the bottom. It says sign up for membership. I need to take that off because that program is no longer there. The month trial is there. That's not a problem. It's just you really won't be anywhere if you log. You won't. Nothing will happen if you use that method to become a member or sign up or anything. Okay, so pinball setup. We're looking for a chart that's in a downtrend, coming off the bottom. Now I'm not much of a trader trying to find these bottoming patterns right here. And in all honesty, I find that most, I say most, not all, most traders that go after this, after a period of time, they realize this is a really tough game to play. And at the end of a month, they'll find that they just aren't making any money. The T line is the 8 exponential moving average. So, yeah, I will, GG. I didn't notice that till yesterday. I was looking at that. So anyway, what happened when I first started? And by the way, this is the very first chart pattern that I really started to make money on. This is the chart pattern that took me from wishing I could trade for a living to actually trading for a living right here, this chart pattern. And I used to always go after this sort of scenario right here, and I would just always lose money, just never make any money on it. So I had to come up and design a way for me with some rules on what can I do. Well, that's about the time the T-line came around, and this is back when I was moderating Candlestick Forum, Steve Bigelow's room, and this is where I came up with the T-line, and I taught a lot of people there, taught Steve about the T-line, and a lot of people's made money off of it, so that's great. I mean, we like sharing, and we like hearing success stories on it, so that's terrific. So what I needed to do is a very third grade method of looking at a chart and saying it's working in the right direction. And that's what happened with the T-line is once price got over the T-line, then I would be long on that chart using the T-line as the stop. So immediately long, and then if this would have, I probably should change colors here. Let's see, green for long. You know, immediately long, and then I found that if it came back through the T-line, I would be out of it. And it kept my kept my stop very, very small, very, very tight. Well, what happened was I realized I got faked out of a fair amount of them on the first day. So what I did then, because after flipping through charts, I realized that when it did this right here, when it closed over the T line, there we go. When it closed over the T line, in this case, say Thursday, then the ideal time to buy it was on positive trading over the T line the next day, so Friday. So this would have been the ideal entry on this chart, not necessarily Thursday's entry, although I did enter this Thursday because it just looked so compelling and I was so excited about this chart. That's why I threw it out there Thursday night. Let's see, does the 20, no, the 20 has got nothing to do with it. Now I'll get to all that here in a second. Yeah, the 20 has got nothing to do with it really, other than it has to be in a downtrend. So what I found was the pinball setup, and this is how it got its name, the pinball setup, is it would run up, and I found that the 34 exponential moving average, that's that orange dotted line, might be red to you guys right there. That line right there became a powerful resistance area to the point where when I started doing this, I would be long, I would stay long, I'd stay long. Well, here, let's do it. Let me do this red. I would stay long, stay long, stay long, stay long, and I would lose money. Well, like all traders, do. Yes, it is a fib line. Like all traders do when they first start out, they don't know when to let go of a trade. I was no different. So I would stay in it, and I would kick myself. Why? What's going on here? Why didn't I make that money there? Why didn't I take that money off the table? And then I would close it out with a loss, and the silly stock would go back up. It'd go back up, something like that, many, many times. And I was like, what in the world am I going to do here? I see this happening over and over. So what I decided to do was quit fighting the system. Trade with it. So what happens is I would stay with it up to the 34 EMA. I would take all my money off the table. I would let it pull back. And then I would watch for that buy signal. And I'd get back in it. And that's how it got its name, the pinball setup. Just up and back, up and back, up and back. It does that quite often. So and if your sound is cutting off, it might be better if you just log off and log back in. That might be the best thing to do. Maybe even try a different web browser. So anyway, that's the rounded bottom breakout, the basics of it. The 20 has absolutely nothing to do with it. Here, let me take this off. There you go. The 20-day simple moving average has nothing to do with it. Well, what I'm looking for is a move from the T line to the 34 EMA. Something else I'm looking for is I want a minimum of 10% in here. Now, there's a couple of reasons why I want 10%. One reason is quite simply I don't want to go to work for 2%. It's not worth it. I want to go to work for 10% or more. So I want plenty of potential in here. Plenty of potential in here. The second thing is really what we're doing is we're looking at an oversold bounce is what we're doing. And I'm not looking for price being oversold. In fact, many times price is actually overbought. But anytime you have a big spread between a moving average, I should be careful how I say anytime. The majority of the time, when you have a big spread between a major moving average and a faster moving average, and they're spread out like that, what I'm looking for is oversold condition with the moving averages is what I'm looking for. So I'm just looking for a snapback. a relief rally, if you will, because that's the trade right there. Now, I'm not saying that this trade can't continue up. It can. Remember, rule-based. No matter what you do, I think rule-based is the key here. And the rules are we buy when it's over the T line and we sell or maybe sell half when it's at the 34 EMA. Let's see. I think, yeah, thanks, Gigi. Mike there is asking what indicators do you use in conjunction? I don't, Mike. I can't, I don't want to pick on indicators today. I really don't. But there's just not, price tells the story of everything. Quite simply, you're looking for a chart pattern that's down, and then you're looking for a chart pattern that where price comes up, closes over the T line. The buy is the next day. We want 10% in here. We set our stop. We have a very tight stop, rule base, and then boom, we're making money. Yes, Tony, the 34 EMA is an indicator. All right, let me rephrase that. Outside of moving averages and volume, I don't use any other indicators. Let's see. Swapen is asking how to find these stocks. What I will do is I have your email address. I will send you the scans. Now, I use TC2000, but I will send everybody here the scan for each one of these chart patterns that I'm looking at here. On the member side, we are working on putting converting it to Thinkorswim, and for members, we'll have it over there for Thinkorswim. I was also asked this yesterday. Somebody would like to be here, and they said they use Metastock. So I don't use Metastock, so I'm actually looking for somebody that can convert them to Metastock code, and I can put them on the website through Metastock. So if you're a Metastock user and if you're really good at code, I'd be more than happy to talk with you if you could help me change them over to that code, and we'll have a section in the member side. Same with TradeStation. If anybody can write TradeStation code, we'll be happy to do that. And it'll, like I say, it'll be on the member side. Okay, so the pinball setup, it's an easy way to make nice 10%. Take a look at body here. If you would have entered body right away in the morning, Friday morning, you'd be up, what, about 10.6%. And this looks like it has about 35-40% to the 34 EMA. Terrific looking chart, and I hope that made sense to everybody here. I've got see, I have another one written down here, INUV. We'll take a look at INUV. I have to watch the time here, just because we don't want to get too carried away and run over our hour. Here's another pinball setup, and you can see where this you might have caught it on the scan here for an entry on this day, on the next day. So that would be the 22nd. And here you can see where there would have been a 19%, a little over 19%, depending exactly where you entered it, move to the 34. And yes, I would have taken my profits, at least 50% off the table. Remember what I said? Trading is about making money. Trading is about making money, and it's not about being right. So if somebody says, well, this stock looks like it's going to go higher, in fact, man, I think this stock is going to go up here to $1.20. You know what? You may absolutely be right, but what if you're not? Here we have a chance to put 18, 19% in our pocket. I'll take that any day of the week. So it's all rule-based. Rule-based is what works here. Some of these questions, we're going to have to wait to the end because I'm having trouble telling what is an actual question, or things like that. We went over the moving averages here earlier. I'll do that again in the end, but I'm not going to stop and do that in the middle because it's kind of a waste of time here. So in the end, I'll answer some of those questions like that. Okay. So write some questions down on the rounded or on the pinball setup, and let's take a look at that toward the end. And if we could, all right. Let's talk about the T line just a little bit, and the T line. The T line was one of these. This was one of the biggest aha moments for me ever. Was the T line, because candlesticks are great. I love candlesticks, but candlesticks sometimes gives you a false sense of security, or they give you these head fakes, or they not every single candlestick doesn't always tell the truth. What is follow through? What is breakdown off of a candlestick? It's sort of sometimes it's kind of hard to read them, but it's not hard to read a chart if it stays in a continued trend, whether that trend is up or whether that trend is down. Now, when I first started talking about the T line and using the T line and sharing it with others, I also used the 2 exponential moving average, and that's what this green line is. Now, over time, I've gotten to where I don't use the 2 so much. Not because I don't pay attention to it, it's just because I know when the 2 comes down through the T line based on the candlestick. How far below is the candlestick? Are we looking at 2 candlesticks below the T line? Things like that. You get where you know what the 2 is doing. And same if it's down below here. So what I had to do was design a way to say what will keep me in the trade. And again, rules are the best thing out there. Something being rule based. And if you take a look at this chart, and I've often thought, in fact, I've talked to an individual that writes code. I use a scanner, and he writes a lot of code for this particular scanner. And I've often thought of having him write a code, because I also know that a project they're working on is some automated trading. Well, one of the things I've contemplated is saying, I want to know, or I want to trade, say, a basket of stocks. Pick your basket. It could be the S&P 500 for that matter. You could pick any 10 stocks you want, 20 stocks, 100 stocks, doesn't matter. But I'm willing to buy every single stock, put a certain amount of money into every single stock that follows certain rules and have some automation to it. Now, I'm not into automation. I'm not into black box trading, so I haven't really pursued that. But if you take a look at this chart pattern on how to use this, you'll find that it works almost every time. If you just simply went long right here, you stayed long till actually right here, you would have been long. And now that you're not long, if you would have simply, and let's do this too, that would have been green for, you would have made money. If you would have went short right here, and you would have covered right here, well, we'll make that green because you would have made money. Now, the problem is when we get into some real choppy, but this is where fast trading would come in. You can see that you would have covered, and you would have also went long here, and you would have, let's trade that color there, green. You would have gotten out right here. So you would have made a little bit of money right there, just simply using the T-line and what price does in relationship to the T-line. It would just simply be, I'm long when it moves over it, I'm short when it moves underneath it. Some trades might be a matter of a day or 2 days. Some trades might be an entire month. But if you go through and look at any chart you want, it doesn't matter. You'll see that this will happen, and you'll also see choppiness. So it's just a great way to trade, a great tool to tell you if you're on the right side of the trade. In other words, you wouldn't want to be short anywhere here because it's still trending up. You wouldn't want to be long anywhere here because it's trending down. The green line that you see there, that's the 2 exponential moving average. And we can actually take that off. Oh, yeah, we can take that off. There you go. And I better take this one off. This is the same thing. There you go. There's just candlesticks and the T line right there. Just simply using that. If the candlestick closes below the T line, you know to step out of that trade. Just as simple as that right there. When the chart comes up over the T line, that's a good time to be in. By the way, if you look at stocks that gap over the T line, they tend to give you a little extra, a kind of a bonus, because I think they tend to work a little bit better. So what if a chart was to gap up big like this? Well, this may not be the best time. Whoops, try this again. This may not be the best time to enter it, but if it moves sideways and the T line and price catch up to each other, then you might want to start looking for a buy signal in this area right here to get you in that groove there, and then you start riding that T line up. Let's see, do you use higher time frames? No, pretty much just stick with the daily chart. I'm not a real big believer in using the 1 minute, 2 minute, 3 minute charts. I do use the 15 minute, the 30 minute, and 60 minute are my favorite intraday charts. I'm predominantly a swing trader. Let me back that up. I am a profit trader. I'm a profit trader. Second, I'm a swing trader, and third, I would be a day trader. Usually I'm a day trader only because I'm in a stock and it gives me 10-15% in one day. Okay, that makes me a day trader if I take that money. But I started the trade as a swing trader. Like I say, I think all day trades should come from good solid swing trades. That way you have a choice at the end of the day. That good question. Thank you very much for that. The T line acts as a kind of a directional beacon again. It's are you on the right side of the trade? And it always amazes me how many people finally decide to go long in this stock, after it's been up umpteen days, and they finally go long, and they're still long and still long and still long, and then they start crying the blues, and then they start looking for all these things like, oh look, a double bottom. Okay, I'm all right now. Well, that's great if it works out, but the truth of it is, if you would have just cut your losses, you'd have been so far ahead of the game, and that's where we just have to have these rules here. Okay, that was a little bit on the T line, and you're right, I'm never going to make this in an hour. Let's take a look at some J-hooks, J-hook PBO, J-hook PBOs. PBO stands for a pullback opportunity, PBO, pullback opportunity. Now, a J-hook is not a J-hook till it actually finishes the J. So here we are here. Is that a J-hook? No. Is this a J-hook? Yes. So anything in this area right here is part of the what I would call the PBO area, the pullback opportunity. This is where we're looking for a stock that's trending up, pulls back, and then you look for that entry in the bottom part of the J, or just as it starts moving up a little bit. That's what I look for a PBO. You'll find I rarely trade actual J-hook breakouts. Now, it doesn't mean that I don't. It just means that I'm looking for them right here, and if they start breaking out and they do something like this, well, that's gone too far for me personally. Now what I would have to see, and I wouldn't throw this chart away, but what I would have to see is this process to repeat itself. So I would need to see this move down, come up, and then I want to be a buyer here and or as it starts moving up so I can be ahead of that breakout game. Again, back to rules. I think a trader has to have rules. So if a common rule that a lot of traders have is, well, I don't want to buy this stock because it's too high. Okay, then don't. Then you have to learn to buy on the pullback. So if you're watching this stock here and it moves up and you're not buying in here and you're trying to buy it when it moves up and it moves out of your range and now you say, well, it's too high, then you have to buy it down here. I can't tell you how many traders that I talk to, they look at this chart and it starts to move up a little bit. I'm gonna draw another candle here. Starts to move up, and now they start getting a little wishy-washy about well, now it's too far away from the T-line. In other words, the plan is I'm going to buy on a breakout, but the fact is once it breaks out, then everyone's scared to buy it. So this is where you've got to stop that insanity, and you've got to say, okay, no problem. You know what? I'm not interested in buying that. What I am interested in is buying the follow through. Here, take a look at this chart here. If this breaks out, and you buy it down here, the direction that we're looking for this to go is just about a 45-degree angle like that, right? We know as traders, and if you don't, you should know, as traders, the stock is not going to move in a perfect line like this. What it's going to do is it's going to pop up, pop back, pop up, back, just like that. So what are we going to do? We want to buy it on in those valleys, those lows down here. So this big candle that's up, that your original plan was, I'll buy it on a breakout, but it breaks out and it scares you away because it's too high, and then you never look at the chart again. The fact is that breakout could lead you more times than not to higher highs. So allow it to pull back. Here we go in this craziness again, though. What happens is it starts pulling back. And now you tell yourself, I can't buy this because this thing is tanking. We use words like tank. That's not tanking. Look at this chart. Was that tanking? Was that tanking? Was that tanking? Was that tanking? No, it's part of the trend here. So there's where that T-line really comes in helpful, is as long as it stays above the T-line and it pulls back, look for some of these buying opportunities, these what I call PBOs, pullback opportunities. And they really work great when you have that J-hook setup, that beginning part of the J-hook setup. It comes back, you get that into that pullback, and then you can play this rally up. If you're a longer term trader, you stay with it. If you're just a swing trader, you know, you're buying the peaks, buying the valleys, selling the peaks, and you'd be looking at each one of these valleys as a possible buy. Let's see, Vic is asking, and if I miss your question, please don't be too angry with me. Ask me again toward the end of this seminar, and I'll stay here all day and ask questions if you want. Do I buy near the 8? Not always, no. No. And nor do I wait till it's over the 8. I'll buy underneath the 8 many times and many times over the 8. Vern is pointing out that the 8 is a fib line. Interesting. When I first started trading, and I kind of put this together, I found that the 8, the 34 EMA, I used the 144 EMA at the time, and there was a one more in there. Somebody, and this is before I even knew what fib lines were, some fib experts told me, said, you realize that those are Fibonacci lines? I said, no, I had no idea. At the time, I didn't. Here is how I found the T-line and how I found the 34 EMA, how I found to use some of the moving averages, is I would sit for hours and flip through charts. And, you know, I would have all sorts of indicators. This is back when I had indicators. I had the chart looked like a mess, looked like a garbage dump, with moving averages and Bollinger Bands and indicators, just crazy in there. And what I would do is flip through charts like this right here. I would just sit and flip through charts. And then I would notice that, well, that indicator absolutely has no value whatsoever. And what I would do is eliminate that indicator. I'd go like that, and that moving average had absolutely no value whatsoever. And I would eliminate that moving average. And before you knew it, it came down to where I had no indicators, because no indicator works with price, because they all follow price. So it made no sense to me why I would want to use an indicator. So I quit using indicator. The hardest thing in the world was for me to give up my stochastics, because that's how I was taught, was stochastics. The hardest thing in the world was to give that up. But once I gave it up, it only took about 2 days to get used to it, and then all of a sudden, what do you know? It works. So following chart patterns and the price, that works out so well. It's so easy to follow. Here's a J hook, and what we're looking for is a up move, a pullback, and if you know what the J hook is, then you know where to start looking for those early buys. Right in here, or even right in here. Nothing is wrong with buying the breakout. Nothing at all. Providing you get it at a reasonable level. Reasonable level to me is right at the breakout. Again, I hate to repeat myself, but again, the plan is, okay, I'll buy it on a breakout, but it starts to break out too much, and then it scares you away. So if that's the case, I think buying here, and by the way, buying down here would be closer to your stop area as well. And I think it's always great to buy on your near your stop. Okay, in lieu of time, we're going to be about 15 minutes late, I think. I hope that's okay. Let's look at some this next chart pattern. This next chart pattern is without a doubt my favorite chart pattern of all time. It took me a long time to figure this out, which that's embarrassing to tell you that, but it did. And I call it the rounded bottom breakout. It's RBB for short, and it's another chart coming off the bottom. Quite some time ago, I started looking for ways to find charts where the entry price was down here. Entry price was at the bottom left corner of my chart, and the chart would go like this, and then I want to see the exit price up here. Up here, there we go. Well, I kept looking for charts like that. I developed a couple of scans that would let me see those. Now remember that the entry price, if it's on the left side of your screen, the lower left, that means that at some point it was actually over here on the right side of your screen. Take AT. This right here is what I would call the right side of the screen. And assuming price continues to move up, that means the chart is going to move to the left. Price moves up, chart moves to the left. That's how you would get, assuming the chart keeps moving up, that's how you would get an entry over here and an exit over here with some pretty nice profits. Well, as I kept looking for these charts, I kept noticing a couple common denominators. And one big common denominator was, I'm going to delete all this now. One common denominator was they were stocks that trended down. Then there were stocks, the other common denominator was they went flat usually, and then price started to turn up. And what I found was if they could get through what I call the big three, and these are the three major moving averages I use for this particular chart setup, and that's the 20 simple, the 34 exponential, and the 50 simple. Once price got above those, all of a sudden a trend developed. The trend is your friend. What I find is most people don't have a definition of a trend. So make a definition of a trend, and you as a trader your trend can be anything you want it to be. Just simply designate what that trend is. So what I discovered was after looking at these charts that were successful, entry down here, exit up here, every single one of them, it was crazy. You look at them and they all, I mean, to get it down here, you had to have the bearishness here. Okay, that's a given. That's no, that's not real smart. That's easy to figure out. But then what would happen was, you're fighting for all the entries in this area here, and you're fighting all this resistance in here. Once we get over the big three, and it's always the 50s, the top line, because we're looking for the 20 and the 34 to be tracking to the downside. So as it starts coming up, we start this trend. So what if the price moves down? Are we still in a rounded bottom breakout? Yes, we are, because this is the start of it, and we're looking for it to move up. Here's another thing. I always want the 200-day simple moving average to be on top, because that's our directional target, and that's always the first target, always the first target right here. And once we get through this area, then it usually consolidates, and then we'll see, this is a whole different trade, is will it come up over the 200? A completely different trade. We're talking about the rounded bottom breakout. Once it does this, the rounded bottom breakout is done, and this provides a tremendous amount of profit in here. I've had more comments by members in the trading room on this particular chart setup than any chart setup I've ever seen, we've ever talked about, as far as making people money. HK is an example. Rounded bottom breakout. Where's the entry? Well, the entry could be really anywhere in this area you want. Now, we tend to look at these areas right here when they first start moving up. This pullback, that would have been a good entry. Anywhere in there would have been a good entry. Remember, what we've done here is we've started a trend. And if it's truly going to be a bullish trend, how do trends work? They go up, they always pull back, every one. There is no exception to this rule. And it moves up and it pulls back. It moves up and it moves back. So what we're looking for is to come out of this area. Notice the lack of resistance. I'm not saying there's not any, I'm just saying look at the lack of resistance over here to the left as it starts moving up, doing just what it should be doing right up to the 200. Past that, the rounded bottom breakout is over. Again, just a fantastic chart pattern. A couple things to note that I saw after this chart pattern, after I started putting some rules with it, is it is the very beginning of a very nice cup and handle, kind of a byproduct of putting together a chart pattern, using these three moving averages, when to enter, when to get out, and get out would be below that 50 area. Here's another thing that I learned, and I owe this, and I want to give credit to two people. One of them is in the room today. Goofy Golfer, Gigi. I want to give credit to him. I want to give credit to 1973 Hog, first name Steve, for those that know him, because here's something that I learned about this rounded bottom breakout. I learned it from them, and that is when you look for rounded bottom breakouts, if you find, because they're in a downtrend, a lot of times that it goes from somewhere up here, you know what, okay, I'll do it this way. Some sort of a gap or a big, just a whoosh to the downside. When this starts to move up, I have found that a crazy amount of times, as it starts moving up through that 50, the big three, you start getting on the edge of where that gap is. That will put you into that gap area, and that is almost money in the bank. Almost. There's no guarantee of any chart pattern to work out, but it's I love those charts, and I owe that little piece of information to, like, say, Gigi and Steve there. So thank you. What stops would you place on these early entries in J-hook or rounded bottom breakouts? You know, let's stay with a rounded bottom breakout here for a minute, and let's take a look at XCO. There's XCO. Here's another one. And I want to look at this because this also has a failed rounded bottom breakout in it. You see how it moved up? And well, let me give you what could be an aha moment here, okay? If you like a chart, I want you to write down on a piece of paper. I'm being serious about this. Write it down. Why do you like the chart for an entry or a buy right now? And write that down. Now, after you write that down, I also want you to write down what would make me dislike that chart. If it is anything other than the exact opposite of why I like it, then you're wrong. So the point I'm trying to make is if you like this chart because it broke out here, where would you dislike this chart? Very simple. If it broke down through that area. If it breaks out, this is why you like it. This is where you would dislike it. So no matter where you enter a chart, you mentioned J-hooks there. So let's draw a little J-hook pattern on this chart I've got here. So let's draw an up move. Now let's draw some pullbacks here. And now let's get it moving up. Whoops. Let's see, move it up. Now let's create the J-hook. There we go. So if you buy this chart, if in this pattern right here you see a candlestick formation that maybe, I mean, you're not going to see this, this perfect little rounded bottom here. You're going to see some choppiness. And let's say you see some double bottom type move in here. And if you like it because of that right there, and if you buy this chart, say in this area right there, tell me where you would dislike it. The answer has to be right here. It can't be, well, I'll dislike it if it comes back down through this level here. It can't be there. That makes no sense. I like it here, but I'm willing to take a loss and lose money, and I'll okay like it if it moves back down to this low. So I hope right there might have been like this big aha moment. That's a big thing right there. So, and then I'm trying to get through these really quick, and then we'll, if anyone wants to stay, I'll stay here till the sun goes down if you want, looking at more of these charts with anybody that would like to. Okay, that is the rounded bottom breakout. All right, now let's take a look at some short setups. Now these are my favorite long setups. Now I'm going to take a look at two different short setups here. And I'm just going to, because there's so many short patterns out there right now, I'm just going to come up here and go to my scans. And I mean, the other ones I had some picked out to look at. This one here, we're just going to, whoops, yeah, I didn't want to look at that one first. We're just going to go through a few scans here. Right here. I'm going to start with this one, and it's basically a blue ice failure. For those that know or have heard of or ever traded with the late Dave Elliott, he's the person that coined this phrase, blue ice failure, and I think it is absolutely one of the best shorting chart patterns there are, and there's just no reason to change something that's so darn good. Maybe put a few personal rules with it that helps you keep, in your boundaries. I think that's important. And so anyway, I want to dedicate this to the late Dave Elliott. Just absolutely terrific chart pattern for shorting charts here. Now I've got a few little twists on it that I've added, and a few little likes and dislikes. One of the things I like is I want a trend that's moving up. I want this thing to be trending up, and I want it to fail the 50, just like that. There it is. It's just as simple as can be. We can go through and we can look at a couple of those. It's up. I do not ever hardly short in this area right here. I tend to look for just this chart pattern, failure of the blue 50, blue ice failure. Because it is just so darn successful. And I'm not a greedy person. Once again, I'm looking for the 200-day moving average as the target direction, and I'm usually looking for 10% in there. Now, at a minimum, sometimes you get some 30%ers, and sometimes it just continues to go right down through the 200 and falls lower. But these are some rules that I want to start with. So I'm looking for this blue ice failure. I really like it best when it's down and it moves up, similar to this right here, and fails. That's what I really like. Because what does that do? Right away from the get-go, we can draw a line from that top to this top and extend it, and we now have a downtrend. How do all charts work? Again, aha moment maybe. There is no exception to this rule. If you are bullish, looking at a bullish chart, this is how every single bullish chart will look. Up, down, up, down, up, down, up, down. Every single bullish chart. Now, the down move, it could be just a couple of bars down, it could be 5 bars down, it could be 10 bars down. But if it's truly going to be bullish, it'll come back and move up. The point is they all move up and back, up and back. In fact, this is how a bullish chart actually stays bullish. It moves back to allow money to flow in. It rallies up to where the money runs out. There's profit taking. It moves back. Money flows in because we're all looking for a good deal. So it pulls back a good deal. That's what drives it up. All right. The same is true to a downside move. How do all down charts move? They move down, they move up, they move down, they move up, they move down. Yes, Tammy, flags, exactly. And by adding a few rules in there and knowing how bottoms are formed, and we can't get in that today because it's just too much time, it would be too much time. You know, a lot of people, they look at this move right here, and they think, hey, I'm going to catch me one great big fat bullish move, and this thing is going to take me up to the moon. But then what happens is they come in here and they get clobbered because it hit resistance and it ends up moving down and they can't figure out what happened. That's because they don't have rules on the board. Put some rules there. For instance, what does a chart have to do? It has to take out that higher high before it can move up. Well, using these moving averages and this blue ice failure can get you into that program that gets you to the downside. You know, when you see this chart moving up, is this a bullish chart or is it a chart setting up for a blue ice failure? Very simple. When you see it come up, and as the closer it gets to that 50, that's where you should start saying, there's no way I'm going to get long this unless it closes over the 50 and starts moving up. And what will happen is these moving averages will start turning and flipping to the upside. So there, I mean, I would trade this long from here up, but as it came up, I would want to be out of it. Now I would want to get short. And where would I want to get short? I'd get short right there. Let's go back to where would I put my stop? First ask yourself, why are you getting short here? I'm getting short because I like it short at this area. So where would I dislike this chart if it went against me? Well, if it closed up over the 50, that would be my stop. So my stop wouldn't be up here. My stop would be, it would be at the same place that I liked the chart. And if I liked the chart well enough to enter it here, then I would dislike it if it started moving up over where I liked it. Very, very simple. Stock trading is truly, truly easy, but we complicate it. We complicate it because everybody out there has all these fancy little tools to help you in trading. You know, fancy indicators, just a lot of junk on their chart. It really doesn't take much to look at this chart and tell you where do you want to go short. And why use the 50-day simple moving average? You can use any moving average you want, absolute any. The trick is to use it consistently, and it's a rule. In other words, if someone was to say, well, blue ice failure using the 50-day moving average, can you do the same thing with the 20? Why, of course you can. Do you think I have green ice failure scans? Absolutely. Do you think that I have T-line black ice failure scan? Absolutely. Depending on what the market condition is which one I might go look at, because I want to go where the crowd is going. And so it's just a rule. This particular chart setup, the rule is I am looking for a failure at or near the 50, and I'm looking for it to head back down to the 200-day moving average. I built that rule in there. When? This is all built into this scan. I want to see charts that are down. For this particular one is up, and then I want to see it back down. By the way, notice the name, RBB top. This is pretty much exactly like a rounded bottom breakout, but it's a top rather than a coming off the bottom. Let's see, do you use the same parameters for moving average in faster time frame? No, I don't. Here's a 30-minute chart. That's what I use in a 30-minute chart. I use the T-line, the 34 EMA, and the 200 SMA. That's all I use. 60-minute chart. Those are my two favorite charts, by the way, intraday. T-line, the 34 exponential, and the 200 SMA. That's all I use intraday. Even on the 15-minute, that's all I use, and I rarely look at anything less than that. Okay, let's take a look at the dreaded H pattern here. And we saw a couple of those were dreaded H's, but I've got my own twist on a dreaded H pattern, and I call it the dreaded H 8-day is what I'm looking at. And there's so many of these, I don't have to cherry pick them. We can just look at the charts here. And you know, we'll stay right here. I want to find something that looks really kind of visual. And here's your down move there. And then you see how this comes up. There's your H. It's just an upside down J hook is all it is. That's all it is. It's a failed high is what we're doing. So we're looking for charts that are down and then move up. And I think all this, the way this is written, without going to look at it, what I'm looking for is the rules are within the 50 and the 20 is what I'm looking at here. I want the max low. I want the close yesterday greater than the max low 8 days ago. So I'm basically forcing a low and then a high. And I want that failed high. Where do I get the failed high? I get the failed high in this area right here. Whoops, not what I wanted. I get the failed high in this area right there. That's all I'm looking for. I'll look for candlestick signals now to tell me if I'm short here. Here, you know, here's your H pattern, and it just they're just all over the place. AMTA. This is another very nice one. So what you're looking for is failure of this area right here. Now I've got other little scans in there that gives them to me up here as well. You just have to look for those signals in there. You have to flip through those charts and watch them. There's 91 in here. I'll bet you some of these you're going to see short where the better entries here rather than down here. So the H pattern for me, it can be anywhere on the chart. You're simply looking for a down move and then that right there. For me, I've just added some rules on there. Again, I've added some rules to where I want trending charts. I want failure charts of the 50. I want it to come up into the 20, 34, 50 area, the big three, and I want it to fail in that area. And then I'm looking for the entry, say from somewhere in here down, because this is where the big money starts from this breakdown down into this area like this. And then the reality is this price going to go down here? Well, it might, but it's not going to do it in one day. It's not going to do it in 2 or 3 days. Not usually. Thanks, Gigi. What it's likely to do is to move down and then repeat itself, down and repeat itself. I almost forgot. Let's go look at the Qs. You know what? Here, I'm going to just go to this chart right here. Let's look at the Qs. Let's take a look at this. I think the Qs are beautiful for this chart pattern. I think it's absolutely beautiful. Let's do this. Up, down, up, down, up. Could this be a shorting point here? It could be. Could it be a point of a bounce if you're bullish? Well, I guess we'll have to wait and see, won't we? But you can see what the chart's been doing, and you can see how you might have taken entries up here, even up here. So it's just a great, it's a continuation pattern, just like a J hook. A J hook is a continuation pattern of a bullish chart. An H pattern is a continuation pattern of a bearish chart. Okay, I'm gonna stop right there and pay all the attention now to the chat. So what I would like, Rick, if you wouldn't mind continuing to record for a little longer, say maybe another 15 minutes. If you get bored and want to quit, you can certainly do that. But I'll take 15 minutes on the recorder of questions, and we'll look at. Remember to put a chart pattern in there. Ask any question you want. I'll do what I can to answer it. Do I trade options? No, I personally do not. Do we have people in the trading room that do? Yes, they do. Do I use Bollinger Bands? No, I don't. You'll find that this is the chart that I trade from right here. My daily chart. My intraday chart is, here's my 15-minute chart. That's the chart I use. 30-minute chart right there. And 60-minute chart. I have found over time that there's not an indicator out there that tells me anything more than what the chart pattern tells me. So I tend not to use them, because what they will do is I'll look at a chart. I'll look at, take the cues. Now, I think we're bearish here, okay? I do not think we're bullish. I think we're bearish here. I think we're going to go lower. I do not think we're going to go higher. That's not to say that we couldn't get some sort of a little bounce, but I think we just continue down unless some great news happens. So if I have a bunch of indicators on here, there might be one indicator that says, well, take stochastics. We're oversold, and most people are taught when you see a stochastics oversold, it's time to start going long. But in my experience, I've seen oversold stochastics point to more downside, just like I've seen overbought stochastics point to more upside. But that's not usually the way people are taught. So Bollinger Bands, if you look at, and I couldn't tell you where the Bollinger Band is here. Bollinger Band, this may be right at the bottom of the band, and now there's people going in crazy long because that's what they're taught, that this chart's going to start moving up, but that's not what price does. All indicators are derived from two things, one of two things, either price or volume. So why not just use what everything starts with, price and volume? Let's see here. Trade options, no. Bollinger Bands, no. Where are the codes for all the scans? There's some in the members area. I mentioned earlier, for everybody here, I will send out the TC2000 codes to you. We're in the process of putting Thinkorswim codes on the website, and I'm looking for somebody to help me with Metastock and TradeStation, so you can get the same codes for different programs that you might use. How do I use volume? When it comes to the chart, MS, I don't really use volume that much. When it comes to the scanner that I use what they call normalized volume a lot, which is the volume at the current print. How does it compare to the average volume at that time of day over the last 10 days? That I use a lot. But say looking at this chart here, when I say, well, I expect the Qs to head even further south, realizing we may see a little bounce, but I do think this downtrend continues for a while. There's not much about the volume that gives me any indication there. I'm simply looking at the chart pattern. I mean, what one way to, yeah, okay, I'm going to answer that question right there. I think that answered it. I really don't use volume that much right in here. What I will do is, let me get to my rounded bottom. Let me show you one area where I will use it, right here. And I'm getting to, say, my rounded bottom breakout scan. If I'm looking for a rounded bottom breakout and I see volume is big on it, then I'm very likely to take a little more interest in this stock right here. RNA, I might be more interested to take interest in this stock because it has bigger volume. AMCC, I might take a little more interest in it because, you know, that breakout there of the last of the big three, the 20, the 34, and the 50, came up with bigger volume. Let me try to find one that, well, here's one here. Now that's not really, okay. Take NRP. I mean, it's a great looking chart, but there wasn't extraordinary volume there. So I might not take an interest in this. Now, but I sure will keep that one on my watch list. It's a good looking chart. So I hope that was helpful there. Bottom line is I really don't use volume that much. Does volume play a role on your analysis? Very little, Sean, very little. I noticed that some of your trades have low volume, below 500,000. What is your criteria for of volume and price? I want to look for, all my charts I scan for are at least 250,000 shares average over the last 90 days. Let's see, answered volume question there. See, Stan is asking, do you use different EMAs and SMAs on different time frames of the same stock? I think we've already looked at those charts. My intraday chart is the T-line, the 8 exponential, the 34, and 34 exponential, and then the 200 simple. You'll find that in any given day, I will trade 85–90% of the time just off that daily chart and won't even look at an intraday chart. Yeah, I'll leave that at that for now, unless somebody asks a different question somewhere. Do you use, let's see, Princess Yellen speaking next week. She always says, good for a couple of up days. Thanks, Pam. How you doing, Pam? But let's see, you do use volume. Eddie, let's I'm looking at my, here, I'll tell you what, let's go look at a pinball chart here. So where to go? Right here. Okay, so my pinball, I'm looking at all U.S. common stocks, volume, 90-day average. Well, it says 300, but it should be 250. Maybe it is 300. I don't know. And then I'm looking for price setting up. All right, let's go look at the scan. I've got 7 that qualify. Body being one of them. I'm gonna eliminate this right here. When I'm looking at this chart here, the volume has absolutely zero to do with anything at this point. What could volume possibly be telling me that I can't see in this chart right here? GIMO, what could volume possibly be telling me that I don't see in this chart right here? Look, I'm not suggesting you should eliminate volume. I'm not suggesting you should eliminate any indicator you use. What I am suggesting is that you do what's right for you. And when I see when we have webinars like this, and I've been to webinars where I've seen other people speaking, and I see people asking these questions about all these indicators and chart formations and all this stuff, and try to get, take stochastics. Well, what stochastic setting do you use? It really doesn't matter. The trick is no matter what you use, is you use it consistently over and over again, exactly the same way. That is the trick. It's not, I had a member in the trading room here a while back, came up with a quote that I can't remember the exact quote. I need to find it somewhere so I can read it word for word. And it's not, the quote was something like, it's not the magic of the indicator, it's the consistency that you use your indicator, whether it be a moving average, whether it be a Bollinger Band or a stochastic or volume or anything like that. It's the consistency. Take stochastics. You can have a 1233 stochastics and you can make money on it. I can have a 533 stochastics and I can make money on it. Is any one of our stochastics better? No. The answer is it's the way we use them. That's the answer. So, please try to understand when I say I don't use indicators, you see right here what I use. And I use candlesticks because it gives me price action. I use candlesticks because it tells me what you are doing. That's what a candlestick will tell me. It'll tell me what you are doing. The group, the world as a whole, it will tell me what the price action is doing for that particular chart I'm looking at. I want to see what everybody is doing. And here, the pinball setup, I can see that everybody dropped it down. I can see that all the weak hands got out of it. No one could stand it. I can see that smart money started buying it here. I can see it starting to put in a pretty good chart pattern that I particularly like this doji kind of a morning star type signal. More importantly, I can see it up. I can see it move to the right. I can see a little gap. Now I'm interested. It's over the T line. It just simply met one of my rules. The dark candle, all that tells me is there's a little price taking on this, and that's where I like it. I want to trade this anywhere from this line up to the 34 EMA here, about that level right there. Whoa, because it's got 36% possible profit potential. And there's just not much about volume that's going to tell me anything in that. I follow the candlesticks. If you get this candlestick, what's volume going to tell you? What you want to do is you want to buy this on strength. So somebody might have a particular rule, like what is strength? Well, strength might be trading above this candle's high. So if you didn't own it, you might own it on a breakout. My definition of strength is anything trading over the T line. So now what I'm going to do is I'm going to take that little T line right there, that little edge, and just kind of walk it up. Just try to keep it in the same angle. So what if we have an inside day? That's above the T line. That meets my rule. Volume has nothing to do with this at this point. I'm looking at that candle. So now I'm going to follow that candle and I'm going to keep trading that until it no longer works or meets my target area up there. So anyway, that's truly what I do. If somebody uses volume and you're making money, I commend you. Please keep doing it. Here's what I always tell people. I think even as good traders, we always are messing with our system. Good traders only tweak their system, and that's all they need to do. Small little tweakers. You just need little tweaks. If you are not making money, then you need to overhaul your system. Don't tweak, flat change. Simple as that. So if it's working for you, keep doing that. Okay, let's see. Sorry I got off on that whole volume tangent so much, but I just needed to really clear that up. I'm evaluating your program versus Steve Bigelow's. Steve's a great trader. What are the advantage do your members have versus Steve? You'd have to ask the members, Dennis, not me. Steve's a good friend. He taught me candlestick signals years ago. I taught him the T-line. You know, we talk every now and then. We've done classes together. You know, you'd have to ask the members that. I'm afraid I can't answer that. You know, here's something I'll tell you. One place you should be, I think everybody needs to belong to some trading community. What that community is, you're going to have to decide that. But I do think it's very helpful to belong to a trading community. And I think you should belong to a trading community that you are comfortable with. That's the most important thing, is that you are comfortable. And I think that's the thing to do. Because there's good traders everywhere. There really are. Let's see. Thanks, Brad. I'll get the recording out. Let's see. Are Netflix and Tesla a good example of blue ice failure? Tesla is. I haven't looked at Netflix in a while. Yes. Yeah, that's an excellent view of a blue ice failure. And you know, where would we enter this? Where would I enter it? You know, there's some people that entered it up here, which, hey, great guns. I look for specific chart setups. So I would consider entering a small amount on this day, a small amount. What I would like to see, if I, you know, entered on this day here, down in here, what I would say, and then like to see the next day is I would like to see this actually move up a little bit, and then I would add more to this short in this area right here. You can see it didn't. So what you would do is you would add to your short as it started weakening up the next day and moving down. So I think that would be the perfect place to look for that. Short now, you know, I think you're going to have to clear this little support area. So short now would be below this area right in here. Risky traders certainly are getting into it here, but then, you know, with a stop that kind of protects you. And Tesla, yes, I closed my short out yesterday just to take my money. I'll get back short Tesla. You know, if it bounces up a little bit, I'm actually going to look for a short. And then if it just continues down, then I'll look to get back in. But I just wanted to protect my money, so I covered my Tesla short yesterday. Let's see, Ninja Trader Codes. If anyone can help me with Ninja Trader Codes, I'd be glad to work with you and get those organized. So I'm looking for people that can help me with Ninja, TradeStation, Thinkorswim. Well, I think I've got Thinkorswim handled. Metastock, and I'll be glad to put them on the website. It'll be on the member side if your members use, but it'll be there. Let's see, for uptrims, buy on stochastics overbought above 20. Uptrends are just the opposite, with stochastics moving below. That is a great technique. Yeah. Thanks, Sophie. With volume, do you use 10-day moving? No. Let's see. So with volume, do you use a 10-day EMA or simple? I really don't. I right here, I've got a 50-day moving average for volume to see, I can peek it and see what it is. But other than that, I don't use 10-day exponential or simple. So it's not absolutely necessary to have any candlestick reversal signal for early entry on the J-hooks. I'm going to read this again because that is a great statement there. Let's see. So it's not absolutely necessary to have a candlestick reversal signals for early entry at these J-hooks, rounded bottom, dreaded H, or trending channel flag breakout. Correct. It is not absolutely necessary. No. In fact, if you consistently wait for that book perfect candlestick signal, you will miss out on a bucket of money. Let's see. Mike's asking about BCE. BCE to me looks like it's just moving sideways right now. What would want to do with that? Whoops, not what I wanted. This is more what I wanted. This thing is just moving sideways right here, and what are you looking for on the trade? Are you looking for up near the $50 area? Then I would probably look at wait for a breakout of these highs, 40, almost $50. That'll get you up into here. That'll get you up into here. You're looking for a breakdown. I think I would look for something below the 200. Right now it's just moving sideways. Here's something I want to point out. Well, actually that's not bad, 9%. I always want to be in charts that give me adequate percentage. So we have a doji here on the 20. To be long, I would have to see this thing come back up over the T line. I would be nervous over these wicks right here, and that would give me a 10% move back up to, say, the 47.50 area. And I could handle 10%. I could do that. And again, for weakness, you're going to have to start showing a little bearish near here. Right now, it's just sideways. Sorry, I got to find my place. There we are. Same rule applies for J-hooks, bottoms, dreaded H formed on the 15, 30, 60-minute fraction. Yes. Yeah, same rules. Absolutely the same rules apply. An intraday chart is nothing but a chart. It's not any better. It's not any worse than a daily chart, not any better than a daily chart. It's just an intraday chart. Do the moving average have to be in the same order? Same order as what? Take the rounded bottom breakout, for example. That has to be, we want it moving down. I'm going to say, I think I see what you're asking, and yes. I want the 20 below the 34, 30 below the 5th, 34 below the 50, and I want to see everything starting to turn up. The faster moving average starting to turn up over the 50 is what I'm looking for. Let's see here. Thomas, the market is in a downtrend. What change would confirm a change in trend? Let's take a look at the SPY. Now, Thomas, I'm not going to say that the market's in a downtrend. The SPY is not in a downtrend. The SPY is in it's in a very junky area, but it's not in a downtrend. It wouldn't take it wouldn't take much to get into a downtrend, but it's just in a junky area right now. take a look at the Qs. The Qs I would put in a downtrend. IWM I would put in a downtrend, but the SPY is not quite in a downtrend yet. Very junky. Let's see, in orange dotted line, thanks, is the orange dotted line, yes, the orange dotted line is the 34 EMA. I'm evaluating your program versus Steve, we just did that. What is your idea of oversold? Price down half a dozen days maybe. If you're using a stochastics indicator, Thomas, under 20. Yeah, under 20. I noticed you do a bit of penny stocks. Why is that? I trade very little under $1. If over $1, if $1.50 is a penny stock, then yeah, I do a fair amount of those. I trade big dollar stocks as well. I'm not too picky, other than under $1. I don't usually trade under $1, but over $1, sure, why not? I can't imagine why you wouldn't, to be honest. One thing about cheaper stocks is they will give you a faster rate of a return, a faster, higher percentage rate of return, which is also true if it goes the wrong way on you. I know volume is the fuel to move the price. Stalker, I do not agree with you. I absolutely agree with you. But let's take this chart right here. We're already right there. What is it, just looking at this area right there, could you have made money right in there without even looking at the volume? That's my argument here is once we're in the trend, trade this right here. I'm not sure what this tells you once you start looking at this. Again, I'm not trying to say don't use volume. I'm just trying to say, what does this tell you that this doesn't tell you? That's all. That's all I'm trying to say in there. I see people too many times hung up on certain things. Somebody could make the same argument to me, just the opposite. They could say, well, I use volume 100% and never even look at the chart. I suppose that could happen. State your argument. I'll go with it. My argument is just, what is it about this chart right there, that trend trading? As long as the price action is working and we don't see the sell signals, then it's telling you everything you need to know. And if we're not careful, we get too many indicators out there that start contradicting what we're looking at right here. What we're really trading is right here. That's what we're trading, is this move right here. And too many indicators start muddying up these waters. That's all I'm trying to point out. Let's see, volume is used to get in and out of trade. Volume. No, I do not use, since that's a question mark, I assume you're asking me, Tammy. No, I do not use volume at all to get in and out of trades. Thomas, is volume a climax? It can show climax or a blow off, yes. Your method is similar to Stephen Bigelow's. No, it's not a coincidence. We traded together for a long time. Like I say, I moderated his trading room years ago for a few years. No, not a coincidence at all. I've done both Steve and Rick. I think it's more focused, fewer no indicators, less patterns, higher emphasis on price, and more entry and stop. Thanks, Bill. Thanks, Tony. Glad to have you here. I wasn't clear how to use the 2 EMA. Uh, the 2 EMA, there's my line chart, what I call my line chart. And I'm going to come over here and let's put the 2 back up. You know what? I'm going to put a different one. It's the same one, just shaped differently is all. There we go. Hey, also, I want to point something out. Notice I'm using high plus low plus close divided by 3. I also do that with the T-line. That's something a lot of people might not have known. I'm using that average, so the high plus the low plus the close divided by 3. Rather than use the open or high or the low, that's what I use there. I think that works better. Gives you more of an average, and that's what you're looking for is the average. So let's do this. I'm going to eliminate candlesticks. There you go. There's how you would use well, here I'll show you. You would be long. You might or might not have stayed in. You might or might not have stayed in. You would definitely be out. You'd be short. You'd be long. You'd be choppy, wouldn't have made any money anywhere. You'd be short. You'd cover that short. You probably wouldn't have made any money. Long. You'd be short, and you'd cover that short. You'd probably be right back in your short. So when you see these crossovers like this is what I would use for trading the T-line. If you're looking just for that T-line, the T-line trade, right there. That's how I would do that. It's very simple. It's like a go, no go. For instance, why would you stay long when it looks like this right here? No earthly reason other than you've got a lot of hope out there. I hope that it stops moving down. I hope it turns down. Please, 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 please. And then about the time you dump it is when it turns around. Just like if you're short, oh, please don't go up anymore. No, please, 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 please. It's just hope. When it crosses, do something about it is what I would do. That's how you would use the 2 EMA. And I know a lot of people are using the 3. There's not much difference. Just do what you're comfortable with. What is your primary entry trigger methodology for your setups, i.e., ice bar breaks, closes? I use good question here. Thank you. Let me put candlesticks back up, and let me load up a couple other little things here. Okay. TZA was a chart that we played the last few days. And first of all, TZA is a rounded bottom breakout, so that's bullish in my book, the fact that it's a rounded bottom breakout. It pulled back right back to the 50. It's still bullish. In fact, if you're in the trading room, you know that I added to my bought some TZA right there on that near the end of the day as we close on the 50. I also added to it on this bullish Hiromi day, and then paid handsomely these 2 days here. Well, what triggered me into this was I use a scanner. So when I see price moving in my direction on the scanner, then that's basically when I start looking at the chart, and it gives me that extra little push to go ahead and buy. So if I see it on the scanner and it's moving up, if I like the chart patterns, if I like the support and resistance, if I like the upside potential, then I will take the trade or add to the trade, and then profit into strength. So it's I don't think there's one absolute one trigger. I think for each chart pattern there needs to be maybe a couple little idea triggers that you might use to get in. I don't know that there's a perfect scenario other than price over the T-line. Let's see here. Well, we'll use that one. Let's see. Do I have it? T-line. Take T-line gap here. Here's, I mean, there's only a few of them that fell into that category. So this would be a trigger not to buy it because it's way out of reach, but it would be a trigger to put it on a watch list and now wait for a pullback for a better time to buy it. And then that's where I'd put it on my watch list, and my watch list is the scanner, and then I would look for charts that start showing up on the scanner. And that's how that's how I would look to get in those. So I need to type one thing here. Okay. Thank you for that. Let me move the chat down here. Stalker says, I need an overhaul. No, seriously, you know, if you're making money, you only want to make little tweaks. If you can't make money, you know, at the end of the week, end of the month, if you're thinking, well, gee, I just wasted my week or month here, then, you know, it might be time to scrap everything and start over. But if you are making money, just make little tweaks, and then you tweak it to a little better spot and little adjustments here and there. But if you're not making money, put it in a garbage can, start over. Let's see, momentum stocks, mostly technical and social media, have been clobbered. How might you trade to avoid or short? Momentum stock, mostly technical and social media, have been clobbered. Okay, how might you trade those stocks? Wait for a reversal signal. Simple as that. Don't trade them until they tell you they're ready. Here's technology. Here's technology group. So what would you do with this group right now? Well, this certainly does not look like a long. I think it looks more like a short. So I would short this until it was no longer a short. Here's something I say that I really feel silly when I say it. A trend will stay a trend until it's no longer a trend. That sounds so ridiculous, but it is so true. The problem is we have no rules set up for ourselves on what is a trend. So here, let's set some rules up. Let's do this. That trend is down right there. And let's draw another line for fun because I think we'll need it. We'll draw from there to there. So what would tell you that this chart is now bullish? I'll tell you what will not tell you. This will not tell you. One candlestick signal, one bullish candlestick signal will not tell you that it's bullish. It just won't do it. What will tell you is if this candlestick signal has follow through that changes the trend direction. The trend direction is down. I don't think there's much of an argument. I don't think anyone's going to argue with me on that. Now, what are we looking for here? What we're looking for is follow through. So we get follow through. Did the trend change on this candle? No, it didn't. Did it change now? Well, it changed over that trend line. But based on this chart, what would we have to see without a shadow of a doubt to tell us our trend is changing? I think it would have to take that top out right there. Forget about making money here. You know, let me back that up. You shouldn't forget. You can make good money in these go nowhere rallies. You can make great money. Just don't get caught in this thinking, oh, to the moon, Alice. We're not going to the moon until we start taking out some of these highs right here. I mean, we're going to have to take out some levels here before we can go to the moon. And because this is in a downtrend, here are some scenarios that might happen. Okay, we come up like this, and then we start back down. This is what it's been doing. So the question is, what would tell us that it is no longer going to do this? What would tell us is if it did the opposite of what it's been doing, which means instead of turning south here, it's going to have to come up like this. Now, once it breaks out, it can come down, but now it has to use some support in here. And then we would look for this to bounce up and take this next level out. At this point, this is where we might start seeing a turnaround. So unless you can short, and some people just cannot short for a lot of reasons, but unless you can short, I would just stare at this chart until it starts changing the trend. I would not even think about buying it. Unless you're just looking for a quick bounce. You know, if we see a drop to the 200 and it does something like this, would I trade that? Absolutely. I would trade it up to about there, and then I'd get out of it and wouldn't look at it twice. I'd take my money and be happy. Thanks, Thomas. Thank you. Let's see. Dennis Rick is in the room pre-market and goes over. Yeah, thanks, Petra. Yeah, for anyone interested, you know, okay, here's my sales pitch of the day. The only thing I'm going to sell. Look, I'd love for everybody to become a member. If you become a member, the room is open 24 hours a day. If it's down, it's only down because of some technical, or sometimes I have to shut it down to clean it up, but it comes right back up. We have people in the room that post charts, news, information, really early in the morning. I come on at 8, 9 Eastern, spend anywhere from, say, 15, 20 minutes on talking about the trade ideas for the day. And then at 9:30, I'm there, and you know, we look at trades. I'm there most of the time during the day. I do take an hour and a half, 2-hour lunch most days, but I'm there almost all day. Other than that, so there's my sales pitch. Hope to see everybody as a member. Come on over. Thank you, Hag. I feel awkward to say Haggith. Haggith. Thanks, Joan. Appreciate it. Gigi, Gigi says, I like this trading community, but there's just not enough naked traders. Let me explain. Let me explain. This is our naked, well, here, let's make it naked. That's our naked chart right there. Nothing on it, just candlesticks. How to avoid the problem of all your trades piling in the same time when you give your recommendations. How do you avoid the problem of all your traders piling in at the same time when you give your recommendations? Let's see, Enio, I'm not quite sure what you mean. I'm just a little guy. All your traders, my traders, I don't think I have any traders. I think I have individual traders that work together and really help each other. I don't, I don't for a minute think I'm big enough that, you know, you say everybody piling in. I don't think nothing matters there, to be honest. I'm not nearly that big. I'm a little guy. Yeah. Let's see. Do I think moving averages have to be in order when bullish? It depends what kind of chart pattern you're looking for. Uh, if you're looking for a chart, say here I'm looking right now. Give me a second. I'm going to run through just a couple real quick here. Whoops, let's go back to that one. What was that? Let's take H-Way. Oh, by the way, H-Way was one of our trade ideas right there, and it's still rocking on. So, okay, so your question: do the moving averages have to be stacked? Um, if one, it depends your definition of a long trade. Are you looking for a few percent? No, they don't have to be. In that case, you're just looking for pops and drops. Maybe you're looking for something to pop and you're looking for it to get out. If you're looking for a stock that's actually really trending, then yes, those moving averages will be stacked up. I'm going to eliminate the 200 for a minute to get it out of the way. There we go. Just take a look at what we have here. And I believe trading within the trend is definitely better than anything else. And just by using the 50, the 34, I'm sorry, the 20, the 34, and the 50, you can see the trend. Now, what do we know about a chart? What do we know about a bullish chart? We know that they have pullbacks. Once we know that, once we accept that as a trader, then we stop looking at this as, oh my goodness, the world is coming to an end. You know, you stop looking at this as panic city. You look at this as possible opportunity rather than, oh my gosh, this is tanking. No, this is not tanking. This chart is doing what all charts do. All bullish charts will pull back. This is what allows money to come in to move it up higher. So when I see a chart that's trending up like this, I'm going to look for opportunities in this chart. So again, your question, if you're looking for quick little moves, for instance, let's take a look at that body, which was featured trade idea Friday. That's not it. Are those moving averages stacked? No. Did this give us 10% plus yesterday? Yes, it did. Does this have the potential to give us another 20%? Yes, it does. Does it have the potential to give us another 50%? Yes, it does. And the moving averages are not stacked. So it depends the chart pattern. It depends what you're looking for, whether you're looking for something very short term or something a little bit longer term. Here's where a trader has to sit down and write some rules down on a piece of paper. And let me change that. Not necessarily rules. Write down a trading plan. What is it you want out of trading? If the first thing you say is to make more money, then I would, go find a job. That should never be the first thing. Maybe about halfway down the page, that should be the first thing. But the first thing would be a serious look at what is it I really want out of trading? What do I really, really want? What's realistic? And then you start putting your plan together. Trading is like a set of gears. If you can imagine me right now, my hands are literally raised in front of me, my fingers are opened up, and now they're starting to lace one another within one another, like gears do. And a trader and a trader's way of trading has got to be like a really good meshed, oiled up set of gears. You've got to have a plan, and you've got to know what you're doing, and you've got to be comfortable with that. When you have that, you have success, and it starts from knowing where you want to go. No, go ahead, Rick. You can shut down. We're going to stop the recording now. It's 2 hours long, so no one's going to sit and watch this for 2 hours. So go ahead, Rick. Shut the recording down. So thank you very much. Appreciate it. Let's see here. Let's see. You moving average. Okay. Let's see. I use NinjaTrader, and I didn't know they had a scanning feature. I thought it was just charts. I don't know. I use it trade with. I don't scan with it either. Naked charts. What indices do you use to primarily long or short? I primarily watch the SPY, SPY. It's kind of strange though because I primarily watch the SPY, but I love to trade TZA. um, I can't explain why. I really don't know. Uh, but I love to trade TZA. I rarely trade TNA, and I watch the SPY mostly for market direction on what the overall market is doing. Here's another little VTI. One of our members in the trading room showed me this. I had no idea this was even existed till several months ago. But he showed us this stock here, VTI. He teaches a college class, some options stuff, and showed me this right here. And I've gotten to where I follow this quite often. And it's a total stock market ETF. And I don't usually follow it during the day in the room. It's one of those charts that I look at in the evening. This chart here, and then VT is another word. This is the Vanguard Total World Stock ETF. I also tend to look at that one in the evenings a little bit to kind of give me kind of a heads up what the market, what the overall market is planning, what its attitude is. There's two little charts right there that might help. Let's see what do I use sectors? Sometimes I certainly follow the 11 sectors in TC 2000, like utilities, consumer defense, communication, basic materials, real estate, energy, financial service, healthcare, industrials, consumer cyclical, and technology. Sorry, I look at those. I look at a lot of ETFs sectors. They help me with that. When I sit and do say the morning trade ideas, I do pay a little attention to the sectors, but for the I would say it's 50%. 50% I'm looking at the sectors maybe, and then the other 50% I'm just looking for charts that are have the good setups, what I would call a good setup anyway, in my opinion. Let's see, you're asking about IBM. IBM, I probably wouldn't touch it with a 10-foot pole right now. I think I would want to see what it does here. Are we going to see a little more weakness, or is it going to try to break out? You know, if you're trading IBM, the truth of it is, seriously, here, let me do this here. You know, this is another thing with charts like this. This is where I think people really got to ask themselves, what is it you're looking for? And I'm going to use IBM here. I'm not picking on you or anything. I just want to use IBM for this. What is it you want with IBM? What really? Are you looking to go short? And where's your target? This is important. If you're looking to go short, where do you think it's going short to? A good target would be right here. If you're looking to go long, where would be a good target? A good target would be up here. So knowing that piece of information, let's start here. And let me ask you, would 9.5% be enough money? If you're short, would almost 4% be enough money? And of course, if you're, maybe you're looking short down here. So would 8% be enough money? I don't know. Is it enough? If that's the case, then this right here is a lot of wasted effort, is in my opinion. So if you're long, be long on a breakout. If you're short, be short on a breakdown. This right here is for Guys, I'm going to pick on all of us guys, okay? Girls don't usually do this. I have found that guys they do this a lot. Guys want to buy it here because if it works out in the direction they want it to work out, we want bragging rights. We want to say, hey, look at me. I got this thing in here and it's up and I'm up an extra 1% because I wanted to work my fanny off all day long and be scared to death all day waiting for this to make a decision. But I did it. Guys, we do that. I'm guilty. The truth of it is there's plenty money to be made on a breakout bullish and plenty money to be breakdown bearish. Let this go to all the chumps in the street trying to knock themselves crazy. Anyway, there's my 2 cents on IBM. I think I need more information on really what to do with IBM based on that right there. Thank you for that. Thanks for let me do that too. Do you head and shoulder patterns? Yes, I do. Yeah. Yep, I do. Head and shoulders, topping patterns. If you take a look at the SPY right here, a little bit of a shoulder, a little bit of a head, a little bit of a shoulder, rounded top. A head and shoulder is nothing more than a rounded top is what it is. So candlestick terms, you're looking at rounded top. Western, you're looking at head and shoulder in there. Yes, I do. Can I show the rounded bottom breakout pattern? Sure. Let me try to find one that looks kind of good. Really, there's not a lot. Let's see here. Whoops, what was that? Soda. Hey, Soda looks really good. There we go. Yeah, Soda looks excellent. Soda was a rounded bottom breakout right here. And, I'm not sure I would call that a failure. Technically, yeah, but I'm not sure I would call that a big failure. Up. Now this I would call a failure. That I would call a rounded bottom failure right here. Down it goes. And now here, I think it sets up again for the rounded bottom breakout. There's your stop or support area. It looks to me like we're going to get a nice move up. That's a terrific looking chart right now. Absolutely terrific. Good rounded bottom breakout. What's a simple way to check trend instantly as for your studies? One would be what is price doing in relationship to the T-line? Now that's a fast trend. The second one that I would look at is what are the big three doing? The big three. Here's what I want to do here. And this is one of these things that I've gotten where I really like. I'm going to let's see here. Let me take that away, and let me make this a little darker. There we go. And actually, I'm going to take away the T line here. There you go. This is what I call the big three. Now let's just run through. These are charts that I have that are, there's 2,651 charts. We're not going to look at them all. And let's take a look. We'll take a look at a few. These are filtered. The only filter I have on them is price average 250,000 shares traded over a 90-day period. So the question was, what is a simple way to check trend instantly? I would say this is pretty instant. What is PVH doing trend-wise? Down. CPHI, down. DV, up. HWAY, up. JNUG, down. And do you see what I'm doing here? What are these three moving averages doing in relationship to each other? I would call this down. I would say this is up. I would say this is up. Here, I could probably do this a little better. I would say this is up, starting right here. I would say this is down, starting right here. I would say there's a lot of noise in here. What if price was moving up? Price moving up. I think there's a lot of price moving up, a lot of noise, but the trend, the actual trend, based on what I'm reading there and using this guideline, this trend would not be bullish till it did this right here, started moving up. And now we want to trade within that trend right here. So any kind of pullbacks, I would look as opportunities as long as it stayed within that trend. Great question there. Thank you very much. That was, I couldn't have paid for a better question on that one. Thanks. Is that an official term now? Junkie, yes. Junkie, trading trend, junkie. What's your website? hitandruncandlesticks.com. I think if you click the top left corner, that link up there, yeah, I think it'll take you to the website, the Hit and Run Candlesticks thing. Yeah, Stalker, what it's doing, it's just simply taking the high. I think you're looking at three candlesticks: the high, the low, and the close, or maybe it's one candlestick. The high, the low, and the close, and just divide it by 3. If you don't have it, you don't have it. There's, I don't know if you have TC2000. If you do, just simply click on it. If you don't have it, then you don't have it. There's not much you can do. In fact, I'm not sure it would make necessarily any big difference, to be honest. It's not going to be one of these earth-shattering revolution type aha things. Thank you, Petra. Now put the price back. There we go. Green. The green line is the 20 simple. The black is the T line. That's the 8 exponential moving average. Let's see. As Thomas is saying, average volume in IWM has been greater in downtrends over the last 30 days. Yes, that's definitely helpful. Let's bring IWM up here. Here, let me get all my stuff back to where I was real quick. All right, we'll stay there. We need to bring the T line back up. And let's bring the 200 back up. There we go. Now, let's go over here to our naked chart. Here's IWM. Let's look at this in a different. Thomas is pointing out volume, and yeah, volume is in the down moves are a little more. A few people have noticed that in the room. Let's look at this in a different way, and I think this is really a very nice way to look at it. Let's get bullish here, okay? Let's take all the bullish moves. Now let's take all the bearish moves. Now, I'm a pretty simple guy. I really am. But who's winning that battle? I mean, I think that's just very clear. It just, I don't know, it just brings that chart out to me, and it tells me who's winning this battle. Now, I I noticed up there, Gigi put a weekly on the SPY up there. Are we, are we like bearish, heading back down to $64? I'm not. I don't have the foggiest clue. Are we currently in a bearish little trend? Yes. The overall picture, are we bearish? Not yet. Not yet. So, you know, Thomas, just want to, to you mainly here, be careful in trying to predict what's going on. Let the chart tell you what to do. For instance, what would tell us that the IWM is back bullish? I'm going to draw one simple line. One simple line. And this is based only on what I see right now. In, say, Wednesday, this could change. But right now, here's one simple line that would tell me that we're back, this downtrend has now changed to an uptrend. When price crosses 115. All the bullish candlesticks in the world down here won't tell me anything other than, hey, let's go for some nice trades in here. But as we approach this area, I would get out of those trades. I would get cautious and wait and see what it does with this area. We close above, and then we do a little pullback maybe, and then show a bullish reversal. Then we have something. So that line right there is what I would look at if you're looking at IWM. Let's see. What will you be looking at to get into PBH? PBH. I'm going to come back over here to this chart. First of all, I want to ask myself, what do I know about charts? And am I wrong sometimes? One, I know a lot about charts. Am I wrong sometimes? Absolutely. But here's what I know about charts. I know charts gives you a second chance every single time. So what I'm going to do is I would wait for some consolidation. The consolidation could come all the way back here. The consolidation could only be in this area right here. So really, I can't tell you, well, I'm going to buy this at $29.52. I can't tell you that. I can't tell you that I would buy this chart at $31.27. I can't tell you that. And nor can anyone else. Now, we can make those statements, but you don't have the foggiest clue if you're going to get anywhere near those prices. For instance, in fact, the only thing I think you can say is, I will buy this stock at $32.88 and you put a buy in and it comes up and it automatically triggers for you. That's a possibility. So what I'm going to do is I would put this chart on a watch list. I would see what it does because I know fairly for sure that it's going to give you some consolidation, at least in this area. At least in this area right here. Now, from there, I will watch it, and if it acts right and gives me the right signal, which could be one of, say, 10 maybe, then I will look to get into it. Let me take a stab here. Take oxygen, for instance. You know, at what point did no, I'm not looking for any answers or anything. At what point did somebody maybe get into oxygen because they thought it was ready to go in here? And at what point did somebody get into? Or are you waiting for it to give you that right signal? I mean, this chart is doing exactly what I think some of us want. Big move up, and now it's consolidating. So we put it on a watch list, and we wait for the most opportune time. But we need to wait for that signal. I doubt seriously somebody said right here, publicly anyway, I'm going to wait and buy this at $2.75. Now, you know, maybe somebody did, but I'm not going to put my money on that. I'm going to put my money on that everybody was just getting all kinds of crazy, looking for little entries on here, waiting to be a buyer, um, and it just so happened just trickling down into this area. So on that PHB, is that what it is? PHB, PBH, whatever it was, I would have to wait for that buy signal. So, but one that would absolutely be on the watch list. Very nice chart, by the way. And Pam looks like an H. I'm not sure what looks like an H. Higher highs and higher lows in an uptrend opposed to a downtrend. You date yourself without. Yeah, I'm not as young as I look. Based on the top of your blue trend line on SX10. Let's see. Based on the top of your blue trend line SX10, your symbol replaces stocks too short, if any. What symbol? Oh, okay. I see what you're saying. Here's some stocks. Here's some stocks that's in that sector right there. So you'd have to look through some of these and see what might be shortable based on what short strategy are you looking for. I make no bones about saying I look for a very specific strategy. My strategy is this blue ice failure or this H pattern. So, we went through 5 of them till we got, the 5th one. That's one that I would be interested in. See, I'm not interested in this sort of short. I don't like shorting those. I'm looking for things more like this. Well, not that one, but because of price. But again, not because of price, but this type of chart pattern is what I would look for. I would consider A-Way a short. These are still shortable. I just wouldn't short them. Wouldn't short. So anyway, you just have to find out what's in that sector, in that industry. I say when watching a scanner during the day, do you look for stocks making new day highs and stocks with higher normalized volume and stocks forming patterns using your scanner to watch? Are you using the scanner to watch for anything else? A whole bunch of other things. Like I watch for new day lows, short setups, but all the patterns that I follow are there. Morningstar, doji, gaps, things like that. Just all different patterns, and long and short. And then I'm looking for like 30-minute lows too. So for instance, every day somebody here in the trading room might post a stock that I like, and I post it in my running watch list. This is what everybody might post. Well, I've also got a 30-minute low that is attached to this. So if somebody posts a stock that I really like, but it's too high, then I see it on this. I see it when it's making a 30-minute low. Well, this is where I might go look to buy it. If it's making a 30-minute low, I might look for a better entry on that. Scanner does a lot of things, a whole bunch of stuff. Rich, any technology stocks in? Rich, any technology stocks, Netflix, Amazon? That must be for somebody else, Tammy or Pam. What is the ticker symbol for the stock? That SX110. I think that was it. SX110 technology. Yeah, right there. Now this is on TC2000. You know, somebody else it may not be this. Here's follow SMH. That will all SMH. Follow SMH. This is a really good technology sector to follow. If you don't have that SX1110. Yep, Pam's pointing out Yahoo Finance, good sector information. Yeah. There are lurkers. All hours of night and day. Yeah, what Gigi's saying is in the trading room, there's all hours, night and day, there's people there. You'd be surprised. XLK, that's a nice, yeah, thanks, Tammy, or Pam, sorry. Let's see. Larry, you're very welcome. Thanks, Tom. Okay, sounds like we're running out here. Just describe the scanner's capability. Well, the scanner gives you real-time alert, and I do mean real-time alerts for chart patterns, setups, charts that's moving up and down. You can code it to do different things. You know, there's a 2-week free, absolutely no credit card required trial. And that's what I would strongly suggest. And I offer, you know, my hand goes out to all kinds of help whenever I can help. So glad to talk with you on the phone with it if it's up and running. But it just does. It's a very professional, it's a very powerful tool that I personally think makes all the difference in the world. I have to be careful here that I don't try to sell it because that's not what I want to do today here. So I have to be careful with that. Eddie, how and what's the cost to get there? I'm assuming a membership, $85 a month, and if you buy more months, it's cheaper. How can you tell where I'm making any time frame for the TS? You know, I'm not sure, Mike. I was trying to get them on this weekend, but to be honest, somebody emailed me some information on them, and I need to ask some questions. There's some things there I don't understand, so we'll work on that. Once I figure out what I'm doing, it's just a matter of copy and paste, and poof, it's done. So I might talk with them this weekend. Where am I located? Springfield, Missouri. Membership, $85 a month, cheaper if you buy it by the year, cheaper if you buy it by the 6 months. Good, Thomas. They're great videos. It's down. Question is, so you don't exit when it goes down to the 8. I'm assuming you mean if you're in profits. For instance, TZA. I took my profits on TZA yesterday. No, I don't wait till it moves down to the 8. You'll find that I buy on candlestick signals, but I do not sell on candlestick signals. Remember when I said I was a profit trader? I trade for money. So, and I'm not, and I don't have to be right. So, although I think the target is going to be closer to the 200, I trade for money. So if I'm up $500 or $1,000 or $1,500, and this stock, just assume this is a stock here for a moment, not an ETF. Do something different. There we go. So the candle does this, and maybe it does this. I am very likely to take profits on this and not wait for a candlestick signal. Somebody might ask, well, oh my gosh, why not? Well, I'm here to make money, and anytime I can put $500, $1,000, or $1,500 in my pocket, I'm going to do it. It absolutely kills me when I talk with people that they're in a position and they are say up $100, they're up $200, and they say the question might occur, might happen, or they might ask me or something. They might say, well, maybe somebody says, well, what would you do, Rick? Well, I'm going to take my money. And they say, well, I'm not, because this thing is continuing to move, so I'm going to keep making money. And then I'll get in there and I'll PM them or email them, or I get on Skype with quite a few people. I'll ask them, I say, hey, when's the last time you ever made over $200 in a particular trade? And, I already know the answer. I've already chatted with this person, so, I set it up for them. I feel sorry for them in some ways, because I do set it up so that they're going to get a real boink in the head. And well, I've never made over $200. Well, then why in the hell are you going to let that thing go like that? Well, what are you doing? What are you thinking? But some people just don't listen. And so what happens is their greed catches hold. And their greed continues, and now here they are. And this is where I get the phone call. What did I do wrong? Well, it's simple. What you did wrong is you didn't take your money. But, take your money. Sorry. I just about got myself into one of my preaching tantrums there. I'll stop right now. Let's see. On H-Way, did you get in at $12? If so, explain why you got in that price. Let's see, H-Way. I'm not in it now. I've sold it. I've taken my money. I know some people are still in it. One of the best candlestick patterns out there, I think, candlestick signals, is the belt hold. In fact, I'm going to change that. I think the very best candlestick signal out there is the belt hold. Yes, I think it's greater than the bull kicker. I think the belt hold is by far better. So when we spotted this, and I said, yes, we in the trading room, actually I don't think I was the first one. I think one of our members of the trading room spotted this here, and it was a featured trade idea on the next day, because it was just a great chart pattern, a great belt hold here, and you can see what it did. So when you see the chart pattern that you're looking for, where would you buy it? Well, I want to buy it when it starts showing strength, and it started showing strength the very next day over the T-line. Closed up over that day's close. So to me, that was a no-brainer to get into it at this level right here. So that's that on H-Way. That's because of that right there. Let's see. I'm watching till it's over, then I'll look at it again. Such a great learning tool. Okay, cool. Oh, the scanner, I see, yeah. What are your scan parameters? What I'm going to do is put this together, and I'll put it in an email out to everybody here. Rick, you like TZA because you understand the way it moves. Good question there, Pam. Uh, I'm first going to go to another chart. Well, you know what? You may be asking that because of my comment that I watch the SPY, but I trade TZA a lot. And, you know, I really don't know why. I just started doing that, and I just like trading TZA. You have to have something to go to, I guess. But when I kind of go into what you're saying there, something I'll do is look at IWM, and then I'll ask myself, well, where do I think IWM is going? And if I think IWM is still going down, then what I will do is look at TZA for a long trade. And then I want to look at TZA and look at, can I make sense of that chart pattern? Well, I can. This chart pattern is a rounded bottom breakout, which I absolutely love. I'd buy it blindly to the point of doing it and then asking forgiveness later. I would do that on this chart pattern on any stock, I think. So when I see this starting to work, I look at what the target area is, I look what the upside potential is, and then I look for those entries. Now, I don't like buying it up high. I do like buying it a little on the low side. In fact, if it starts, you know, if I miss this trade, if it starts doing, say I'm out of it now. So say Monday, it does this. Would I be in long this? Absolutely not. No, because as this gets too long, then I think it sets IWM up for a possible bounce. So I don't want to I don't want to trade this up. I don't want to get in it high. I don't want to chase it, because then all it's going to do is set me up for buying like the poor guy that bought it up here, and look where it left them down here, because they buy it up too high. What people fail to forget is, let's go to IWM for this. People fail to forget, and let's go to this chart right here, is what happens after a down move. You get an up move. What happens after a down move? You get an up move. And if you're trading TZA and you're not in tune with what's going on, then what happens is, man, you'll get just nailed every single time. You think you're doing the right thing, but you get nailed every single time. And you just can only do that so many times, and then you don't get to trade anymore. So it's part of being in tune, and also realizing how markets move, how any stock moves. There's only three ways a chart moves: up, down, or sideways. That's it. Now within those, they can move up and down, up and down. And see, that's what, you know, some people get kind of whacked over, is because they don't get in sync with that with that little short little move there, and start micromanaging, and that can really kill you. So, okay, let's see what Rick says and doesn't say is learning moment. Okay, I think. I'm not unsure what you're looking at long term there, Hagdy. So IBM wouldn't be considered an H setup. It might be starting there, yes. And looking at this chart right here, I would say definitely starting that process. But this is not the chart I look at most of the time. This is the chart I look at. So now when I take in other rules that I might have, for instance, this chart is, let me draw a different line here. A few different rules that I might have. I'm going to do something like this right here. So although it may be setting up like that H pattern, the truth of it is it's still trending up. It would need to break down here, and then you've got the 200 down here. So part of my my rule selection is I want to see where the big three are, how they're trading. I want to see where the 200 is. I want to see what this overall trend is doing. And so although it may be setting up, what you don't want to get caught in is, yeah, it comes down, you get all short, and then you go to lunch thinking, and you know, spend your money that you haven't made yet, and then while you're gone to lunch, this thing does something like this, and you come back from lunch and you're thinking, what just happened? Well, what just happened was the stock is still trending up. What just happened was this was just a lot of bulls and the bears in the streets pushing each other. What just happened was we've got some, whoops, different line. What happened is we've got some pretty decent support right in this area here. So this is where that term follow through really becomes important. Let's see, could I look at Baidu? Absolutely. Baidu. I would put Baidu on a watch list, wouldn't do a doggone thing with it till it made a decision on what to do. Now, of course, you might already be long this. I'm sorry, you already be long, you might already be short, I'm not sure. If you're neither, I would wait and let's take a look at it. The first thing I'm going to do is draw a line like this right here. So what does this tell me? We need to get over this area here. Something that makes me a little bit nervous is we're down, we're up, we're down, we're up. All we've done is come to the breakout level, or I'm sorry, the fail level. So right here becomes very, very, very important. Now, if I was short from up here, I would stay short, but I would be ready to correct that if Baidu started trading long. In all honesty, the chart, I don't think anyone has any business being in the chart at the close Friday. I think it needs to be a little more telling for my taste. Yeah, just a little more telling. Okay. Hagdy, you gotta help me out here. We have to go with the whole question, one question, the whole question, all the question. Okay, if you would. If you have a question about soda, please ask the question about soda. I guess I'm not sure how to piece it together. How does one become a member? And what is the investment? Go to the website. Click on the membership button and lay the money down. $85 a month is membership price. If you buy it by the year, I think it's 2 or 3 months free. If you buy it by 6 months, it's either 1 or 2 months free. I can't remember now. I'm a lifetime member, so I don't. I'll have to go see what those are. But by the year is the best. I would encourage you to do that. Thanks, Dennis. Appreciate it. Thank you, DL. Appreciate it. Again, 137 people still hanging out here, so thank you very much. Thanks for being here. I do appreciate it. Thanks, Gigi. Thanks a lot. Let's see. How about when IWM is bearish? How about actually, I think IWM is bearish right now. Actually, I think it is, but by my standards, it is bearish. There are, and I think that's important, what I just said there. By my standards, everybody's standards might be a little bit different, and the key is your standards have to be geared toward your trading. You can't. If you follow somebody that is bullish or bearish, say on the market, let's say somebody has been bearish all year long. Well, if you are, for the most part, a swing trader, an honest swing trader and you consistently follow somebody that has been telling you that the world is about to come to an end for whatever reason, that this market is about to fold, look at all the money you would have lost. So my suggestion would be is to stop following that person. Just go right down there and put the do not send me any more emails. That would be the first thing I would do. The second thing I would do is I would set it up so you look at the market to decide what it's doing, because it needs to be based on your trading. And by my standards, this is in a downtrend. Now let me explain my standards. And for a moment here, I'm going to take off the candlesticks. There's really probably my biggest trend that I follow is going to be, what is the T line? No candlesticks here, no price action. I'm just looking for an all around what the trend is doing. I'm going to ask myself, what is the T line doing in comparison to the 34 exponential moving average? Now, I just have stuck with that for so long. It is just it's one of the things that helped me trade full time, go from wanting to trading full time, and I still look at that. What is the T line doing in relationship to the 34? I certainly incorporate the 20-day simple and the 50-day simple. Certainly do. So here's what I do not incorporate is the 200 on this case, because I know a lot of people look at, well, the 50 is above the 200, so we are in an uptrend. Now, I do not look at that. That doesn't mean it's wrong. I just do not take that in consideration because it doesn't fit my trading style. Well, I see the T line underneath the 34, so that tells me we're in a bearish downtrend. The 20 has now fallen below the 50. That tells me we're now in a bearish downtrend. So as far as IWM is concerned, I think we're in a bearish downtrend. And then look at the overall picture. If you look at this overall picture, we're really still bullish. So the trend only matters to you as a trader, how it compares to the type of trading you do. And that's where we have to make our plan. I hope that made sense. It's a good question. Okay, what do we have here? It would be helpful to do a smaller fractal chart analysis in the case of, would it help? Not really. We'll go look at it, but not really. Because I pay very little attention to the intraday, to be honest. Even if we brought this down to a 30-minute chart, what is that? Where am I going to buy it? How? I remember what the question was. Where would you buy it? I cannot give you an answer where I would buy it because I don't know what it's going to do. Let's make the assumption that it pulls back a little bit more. Okay. Well, if it pulls back, each one of these, let's say, is a candle. So it pulls back a candle, a candle, a candle. Maybe it gives a little hop up and then it pulls back and pulls back and pulls back. I can't say where I would buy it because what I want to do now is I want to find where it makes a bottom, and I can come up with some ideas maybe where it might be close, but I couldn't guarantee that that's where it is. What I want to do is follow that chart and wait for that buy signal. And then what I really want to do is see confirmation. So I might start buying in this area right there. That might be a place I would look. But until I see price action or the candlestick give me a candlestick signal and or a bottoming formation, no amount of intraday charts is going to tell me today anyway, is not going to tell me where to buy it. I don't think it just can't be done unless you just blindly say, hey, I'm going to put an order in and buy it at $30. Well, that's all fine and dandy. You know what? Let's do it like this. Let's draw that line back from here and go to the 34. Let's do that. You know what? I'm going to put a different line up here. Let's give ourselves all kinds of reasons to buy that. And now let's go find the 50% retracement. 50% retracement is right there at that 34 as well. So let's go ahead and say, okay, we're going to buy this, say in this area right there. That's all fine and dandy. We've got an order in, we're going to buy it. Done deal. So the chart pulls back, pulls back, pulls back. You buy it, and it keeps pulling back, and it keeps pulling back. You see what I'm trying to say here? You have to wait for that reversal signal in there. So there's just no way to say, well, this is where I would buy it. I'll buy it at the best time when I see it. Anyway, I hope that makes sense. I hope I'm understanding you correctly as well. Maybe I'm not. Yeah. Okay, let's see. The scanner is a standalone product, has nothing to do with Thinkorswim, has nothing to do with TCNet, has nothing to do with nothing. In fact, you don't even have to be a stock trader to have the scanner if you want it. You just have to have a internet connection. And if you go to the website, there's a 2-week trial, or yeah, 2-week free trial, absolutely free. Please take advantage of me helping you though. How do new day highs and new day lows give you trade ideas? Good question there. Very good question. And you're talking from the scanner there. So let's take a look at, let me find one. Unfortunately, the market, there we go. Here, let's look at pot. If I'm looking at pot and I get an alert of a new day high, say Friday, and I'm looking at this chart pattern right here, if I see this new day high coming up and say it comes up with good VN, for example, normalized volume, then I'm going to come over here and analyze this chart, which should only take about a blink of an eye. Now, unfortunately, we can't talk about it that fast. But I see this, first thing I'm going to do is draw a line up here. Well, I may or may not decide to take that trade because it's giving me the alert that the bulls are stepping in. I want to get in when the bulls are stepping in. So, and I didn't take this trade. I'm, just quickly tried. I've got the scanner up. I didn't close it down, so there's still tickers in there. So I might or might not take this trade. Now, I did not because of this top in here and because I didn't want any more longs going into the weekend. Let's see here. It's like BTI, for example. BTI is showing, here's the scanner, BTI. It's showing 0.6 normalized volume. It's breaking out of yesterday's volume, so I can see that. I go look at the scan. I go look at the chart, and I see a chart that's been up. I see a chart that's flagging. I see a chart that above the T line. I see a chart pretty much. The buyers are pretty much in at this, say, 114 level. So I might take that risk to buy that down here, anticipating a higher move up. But I mean, you still have to consider what the market was Friday, which I think was horrible, and so we just didn't see a lot of follow through. So when you say a new day high, I see a chart coming up, new day high. What I want to do is I want to tuck myself right in behind some good buyers. And that's one thing the scanner will do. It will tell you, hey, look, there's buyers stepping into this chart, and now I want to tuck myself in right behind them and run it with them. So that's how I do that. Okay, maybe we probably ought to, I don't know, stay longer, I guess. Let's see here. Is the stock END, E-N-D, setting up? Yes, I think so, Mike. Yeah, that I think that's a terrific looking chart. Absolutely. This is one that I mean, without question, I'm going to have. In fact, I already know it's on my watch list. So, say, let's move this out of the way. Say, I see a new day high, or I see a 30-minute high. If I see this start to trip the scanner, then I'm likely to buy it. I know where my stop's going to be. My stop will be 315, maybe 314, right in here. So can I afford 4 or 5%? Yeah, I can afford that on a good-looking stock. So if it starts tripping the scanner, then I'm going to get in it. And I mean, people that have the scanner, people that and even people that don't, in the trading room, I mean, you'll see that a lot of times, we call these stocks out, and the silly thing, you get in it, and it'll just go up and up and up and up and up and up and up. And it makes you nothing but money. It's just a great tool. I could talk about it till I'm blue in the face. And I'm sorry, I got off on the scanner talking about that END. I think END is set up very perfectly. I would absolutely maybe even be in it now. It's a great looking chart. Nice candlestick, rounded bottom here. And another thing too that I really like is that it looks like you have about 17% potential to the 50. When looking at a chart, that's something I take in consideration a lot. Is I want my time worth it. Here's a way I would suggest thinking about this. Is first of all, sit down with the sit down with any U.S. stock you want. Set some volume parameters of minimums, like mine, for instance, is 250,000 shares over a 90-day average. You can set yours to whatever you want. You're going to find the same sort of thing. Now, flip through every one of those charts, and when you see a chart you like for an entry, say END at 328, now what I want you to do is go look at your target and go ahead and set your target in place. And for today, we're just going to set the 50 as the target. Now what I want you to do is calculate, and if you have TC2000, it's really easy to do. Just drop your cursor down at the starting point, drag your cursor up, and you can see in the top left-hand corner of my screen, it's 18.31%. So what you do is you start looking at those charts, and you're going to see charts where you do this, and it's only 1.5%. Now, I got to tell you, unless you're buying this really long term for the next 10 years, I can't imagine in my wildest imagination why a swing trader would want to even be in this if it's only, this move from here to here is only 2%. On the other hand, this one is, what did I say, 18 and change, close to 18? That's a perfect chart setup. Anyway, thank you for that. Sorry to go off so much on it, but nice chart. Thanks, GH. Appreciate it. Thanks, Kathy. Thanks, Gigi. Hey, Thomas. Hey, say hi to M for me, too. Yeah. Big hi. See, MLY. MYL. MYL, I would be buying this on positive trading. I think it's also very important to draw a trend line on this, and probably, where are you going to put the trend line? Put it wherever you want. Quite honestly, I'm gonna put it right here, and I'm just slightly above this close, and I'm above the 50-day simple moving average. At the same time, I'm gonna come over here and I'm gonna draw a line from these highs. I'm sorry, from these bodies. I tend to follow bodies more than anything, and I'm gonna draw a line straight across. So what I want to see is positive trading above this area right here. I'd be a buyer all day long in this area right here, all day long. My stop would be anything out of that box, and I would add to anything above that box. Yeah, I'd be a buyer all day long right there. Okay. Yeah, the recording has stopped. Recording stopped about 2 hours ago. Well, I take that back. I just forgot that I've got the recorder running, 2 recorders running. The official recorder stopped about at 2 hours. But yes, there is a recording here, and I will make we'll make it available to everybody. Let's see. I don't know about the other 136, but I don't have a life. I'm the one that doesn't have a life. After gap, let's see. After gap downs over the past year or two, IBM has gone lower. Just a second here. Okay. Yeah, and Thomas, I know you do this sort of thing a lot, and to be honest, that, truly that doesn't have anything to do with the price of tea in China. I would, I would look at trading IBM based on what the chart is doing, not what it's done over the last 2 years. I just cannot stress that enough. Being a swing trader, really doesn't matter what IBM did 2 years ago. It truly doesn't. In all honesty, it doesn't really matter what it did a month ago, to be truthful to you, if you're a swing trader. Swing trader, overnight, you're a swing trader, 10, 15, maybe 20 days. That's somewhere in between there is what a swing trader is. So really what IBM did a year ago has nothing at all to do with what it's going to do today. And I would just trade the chart based on what the chart is doing, and the signals use support, resistance, a trend by your definition, and what is price action doing, and we get that with candlestick signals. So let's see here. Will I review Netflix? Yes. If I was short Netflix, I would probably stay short Netflix. I would not be long Netflix until it said anything. So this is so blatantly short right now. I don't know that there's too much to say. I don't think I could even say get ready to go long. Right now it looks pretty short. Based on the chart, and we have no idea what the next, say, 10 candles are going to do. And that could make all the difference in the world. But based on only what I see right now, the only way I would be long on this is, one, it would have to move above, say, about 350. Two, then it would have to climb above 380. Now, that's not saying you can't play those little longs up to those areas, but I only get the chart I get to see, and that's all I get to see right here. So based on this, I think it's still short. there may be a long play from here to here, and then maybe from here to here, but you need the price action to start telling you that. And these levels right here, they have to be taken out. These are very important levels. So short right now still looks like the winning game on Netflix. Okay, do I have books? No. I no. I say that there's a couple started, but I'm not. No, I don't have any. I'm a hands-on teacher. Let's see. Frenchie saying minor trend, medium trend, major trend. That's very good. Three good points you're pointing out there. How does your trading fit into that? Yep. Thanks, Val. Thank you, Thomas. You take care. Okay. Let's see. Thanks, Nayad. Let's see. VL's asking how do you avoid being paralyzed from looking at so many stocks that may be on your watch list show up on scans at the end of the day? Well, believe me, there's times where I can't trade anymore because I'm so invested that I just can't do it anymore. There are those times, and it's frustrating. And sometimes I have to just get rid of some things to be in something else. It can be overwhelming, but there are things you can do to help with that. For instance, maybe only limit your patterns. In other words, I have a watch list that kind of a constant watch list of 20. Right now it's 2,553 stocks that it just constantly, and it changes based on the volume for the past 90 days. Well, do I trade all those? Absolutely not. Do I look at all those? Absolutely not. Do I look at the ones that fit in a specific chart pattern? Yes. For instance, if I'm into pinballs today, we'll go look at that. That's not overwhelming. There's 7. And now let's drill that down. So I'm going to create a watch list right here. I'm going to call it, what's today's date? We're going to call it 426. Call it 426. So let's see. We'll move this right here, and we'll move this over here. So I'm looking for pinball setups. Does the scan mean that all of these are set up? No, it doesn't. So I'm going to go through these. Now, I'm going to quickly unflag everything in the system. Okay, body. Do I like body? Yes, I'm going to flag it. Do I like GIMO? Yes, so I'm going to flag it. WHX? Yes. DGAS? I wouldn't have it on this watch list. I have DGAS on a scanner watch list because it moves so fast, but I'm not going to put it on this one. Gale? Yeah, I like Gale. Do I like ARO? No. Do I like XON? No. So now I'm going to take these here, and I'm going to copy 4 flagged to the watch list we just created. There you go. What's overwhelming about that? It's just a little bit of organization. It's just a little bit of drilling down to what you want. And now let's even consider this a little bit more. For instance, I can tell you that mine are set up only stocks that have any stock that's traded that trades over 250,000 shares over a 90-day average. You want to thin this out? Raise it up to 500,000. You want to thin it out more? Ask yourself a couple of questions. Do you ever trade $1.25 stocks? If the answer is no, then don't look at them. So taking this, my scan here, I would add a price filter. So I want to see price, say, greater than $10. And now let's run the scan. There's only two, and only one that actually meets the criteria. So one way to, not have, because there may be a lot of great looking charts, but do you need to be looking at all of them? For an example, I can't tell you the people that I work with sometimes privately, they fixate on Apple. Their entire account size is $15,000, and they only buy 100 shares of $10 stocks. I mean, I seriously have to ask them, are you really going to trade Apple? No. Oh, God, no, I could never trade Apple. Then why in the world are you looking at it? So that's my point of drilling down to truly what you're going to trade, not the entire stock market. And that can be very, very helpful in eliminating that overwhelmingness of, gosh, there's so many. So I'm going to fix this. There we go. So maybe, maybe all you trade are, boil it down to maybe 3 or 4 chart patterns at the very most, and only those, and within a certain price range. Now, maybe you trade all price ranges. So, okay, you trade them all. Maybe, your volume, that thins it down. Believe me, you can take 7,000 stocks and drill it down to about 15, and I don't think that's overwhelming at all. Okay, sorry. Hope that was a little helpful there to you, VL. Let's see. BWP, how would this fit your rules? I think it would fit my rules to the T. BWP is actually one that several people in the trading room are trading. I close mine out either, I can't remember which day, either here or here, one of those days. It may be getting set up to buy again, but I think this is just a great chart to look at trading. So rounded bottom breakout, you've got approximately 50% to the 200. Remember I said earlier, this whole gap, thanks to GD and Steve, 1973 Hog, they kind of taught me about this right in here, and really made sense to me. And what I've discovered is the rounded bottom breakout actually produces a lot of these because it's just the way it works. And I tend to pay a little more attention to these because we start moving up into this area here, it becomes easy money. So very nice chart. It definitely fits my rules. Let's see, where am I? Oh, you're welcome, Joan, you bet. I can't imagine anybody sitting through this for 3 hours, but okay. Is Jern still good? Well, I don't know, Tom, is it? You see, here's a great question, but I have to ask you, is it? Because it's one of those things, what is your trading rule? Is it still good? For me, it is. For me, it is because it has not violated this $1.75 low right here. So for me, let me do this. Let me move this. Whoops, wrong way, I guess. All right, we'll leave it like that. Let's do this. If Jern was to trade in a range like this, and then all of a sudden take off and do this, What do you think everybody would say about this? Well, I'll tell you. Everybody would say, well, look, it based out for, what, 2 months? A great looking base. So based on this, is it still okay? Yes. Yeah, it is. Now, if somebody bought it, say, near these highs, is this a good looking stock? No, it sucks. You're down 13%. So it's got to be, you know, we have to have our rules, and we've got to have our personal rules on how we're going to trade something. We've got to set those stops. We've got to let those stops work. And another thing on stops while I'm here is stops. Just a second, I just want to get this in there. There we go. Stops. When we set stops, let's say we buy this chart, we buy it up here, and we set a stop. Well, I'm going to set a disaster stop down here. Well, if you're going to set a disaster stop down here, then you really have to accept the fact you're going to do a lot of whining until you get there. In fact, you're going to bleed to death till you get there. This might have been the truth of it is it might have been a disaster for you right here. Might have been everybody is a little bit different. This might have been a disaster. So I'm not sure what the point is of setting a stop down here. Now, I hear a lot of times, well, I'm going to set my stop so low that I just won't get stopped out on a little bit of a pullback. Well, that's all fine and dandy, but once again, at what point do you wish now you were stopped out? So anyway, do I think Journ is still okay? Yes, I do. Will I change my mind below $1.75? Yeah, I will. But right now, I'm okay with Journ because it looks like it's just basing. And we have this little bottom here, and I'm willing to hold it there. But what's good for me might not be good for somebody else. GILD. GILD, we've got kind of a little bounce up here. Nice money could have been made right in here. The question now is, are we failing? Are we ready to fail? Or are we coming back down looking for something like this? So we've rallied up. Are we setting that low in there, higher low, to move back up? I have to go with two things. One is, well, the problem I see is we're so close to that 50 right now. That makes me very, very nervous, especially in the market condition. Yeah, these areas right here, these areas mean a lot. Right there. So we've got a lot of resistance to deal with right here. So I think I would have to wait. To me, there would be no reason to be long in this. I would never be long in this unless it closed back up over the 50 right here. Here's where I have to ask, where is the trade? Is the trade, is the trade here up, or is it here up? How much are you giving up? Not much. Is the trade a short? Well, it's a short if it starts to fail, but it really hasn't started to fail yet. It is shoved up against resistance, but it just has not started to fail yet. And we have this long hammer day before yesterday, and then a doji here, and we're really close enough to this area right here that, and it just might want to kick up and go through the 50. So I think the truth of it is this area right here, try this again, this area right here is why trade it when so much could be made based on either a fallout or a breakout. That's my opinion on GILD. Do you bias trades with the rest of the index movement? I think following the index movement. If a particular index is moving in a particular direction, then yeah, I would. Yeah, I definitely would. And let's see, Rick mentioned whoever mentioned soda first, I need to thank you. Rick, this does not have the chat search option turned on. Chat search option. I'll have to work on that. Don, thank you. What is my success rate? Trading full-time for almost 10 years. HILL. I starved to death the first year, though. Believe me. HILL. Really, that chart is not telling me anything. It truly isn't. Yeah, it's not really telling me a whole lot, to be honest. Again, I have to go with that. Where is the trade? Where is not the trade? I think is not the trade right here. So the trade would be here, or the trade would be down, I guess, $3 stock. But so anyway, does that make sense? You know, when I do this, does that make sense? We as traders, we have this hopeless urge, and I'm guilty, believe me, I truly am. We have this hopeless urge to get it on the early move, it's just we just have it. It's the way we're wired. The truth of it is, if this is going to be a bullish stock, and I'm going to assume you're looking for a retest of this high up here, I'm going to assume you're looking for that retest up there. So, which means, would we be happy with 37%? I think I would be. Do I need to collect an extra 10%? Well, it'd be nice, but really, but again, we're wired to do this sort of thing. It's human nature. The trade to me is above the 50 up here, not necessarily right here. I truly hope that was helpful. Hope that made some sense. Thank you, Peter. Take care. Thanks, Victoria. Oh, thanks, Sean. Appreciate it. Okay, it looks like everybody's running away. Thank you very much. I do appreciate you guys all being here. Thanks for hanging around for so long. So we'll go ahead and we'll chop it off here. We'll chop it off. Thanks for all the help in the room. Gigi, thanks for your post, hanging around in here. Thanks again, everybody, for being here. I hope it was helpful. You know, I know in the very beginning was fast. I definitely underestimated the whole how long it would take to just look at those chart patterns. But those are, I think, 6 chart patterns that if a person was to follow just those 6, you'd make money. The rounded bottom breakout, I get a lot of people that come to me and they say, man, I just can't make it at this. I need some help. Can you do that? The first thing I do is I strip them of everything they've been doing, and I say, I just want you to trade this chart pattern right here. That will get money in the bank fairly quick. It has so many rules with it. I shouldn't say so many that it's overwhelming. It just comes with rules that are absolute, and it will work. And then if we just pull the emotion out of it and just trade the chart. Okay, so I better quit. All right, everyone, have a great weekend. Please go out and enjoy yourself. We'll get all these recordings sit out, and I do have the full recording for somebody that wants it. It's going to take probably until Monday before it's ready. And then TC Rick, if you're still here, thank you for recording the official recording. All right, good day, everybody. Thank you.